that's out of the way, we'll have to keep an eye out on this stock because it could be ripe for a big bounce, given that this was a bit of an overhang on the stock. I think the stock of the day could actually be Biocon in today's trading session.
All right, Nigel, thanks a lot for that. So that's a stock that we will be tracking, but let's get in some important global opinion. We do have our guest joining us, Ravi Batra. He is, joining in, who is obviously the Chair, National Advisory Council, South Asian Affairs. Thanks a lot, Mr. Batra, for joining in. Crude at 84, we're none the wiser after multiple months of this back and forth. And, it's impacting the Indian macros right now. For all that's taking place, do you think it is possible for one nation to claim stake over the Strait of Hormuz and at the same time impose a toll, so to say? And what happens from here on? What is it that we are expecting?
Well, you've asked a lot of questions, but first, let me just say to you that thank God we finally have leadership that's willing to act. You don't have to agree with President Trump for everything he does, but the fact is he must be credited with the fact that he takes action. There is nothing worse than someone having the ability to make a change or to make correction and then not use that ability. So the fact that the United States has that capacity, it's important to be able to use it. Otherwise, you end up with the red line in Syria like we had when President Obama drew the line and the line blew away. So the fact that President Trump has not given up, no matter the ups and downs that are going on a daily basis with Iran, is something to be applauded. One. Second, we cannot have another North Korea again. The entire world slept. The great powers slept. And North Korea is today a major entrenched power in the nuclear club. And that's not a good thing. It's a bad thing. And we have to deal with that accordingly. We certainly don't want that to happen with Iran when they're supporting the Houthis in Yemen. Even today, the Security Council had a session on it because even the funeral arrangements, as Tammy Bruce announced and shared with the Security Council today, that even the plane carrying the, quote, mourners to the funeral in Iran, they were actually bringing back supplies for, further terror attacks. So we do need law and order, whether it's in a street outside my home or outside your home, or among nations. Even nations need to police their borders, international waters, et cetera, to make sure that freedom actually means something. If you don't police it, there is no freedom. Freedom doesn't come for free. You literally have to police it to make sure that your neighbor stays in their place, and so you can enjoy the freedoms on your own place. So what President Trump is doing with Iran is a very difficult thing because he's trying to get a country to give up its nuclear ambitions. And its nuclear ambitions of Iran are not so they can cut down on power usage or make the electricity cheaper. Their ambitions for nuclear power is to essentially overshadow their neighbors.
All right.
So that's what's going on. And with respect to your question, about for example, President Trump today mentioned that, there may be a 20% fee for all the expense the United States is, incurring just to maintain peace and security in that region. Now, that doesn't mean the customer has to pay. Iran basically has to simply agree to sell its oil in dollars so that it's through the SWIFT banking, which allows our sanctions to work, which allows there to be one set of books, not two sets of books, like a crooked business. So it'll be one set of books. It'll be sold in petrodollars. And as it's sold in petrodollars, then the levy is on Iran, not on the customer. So it's not really a charge. It's not a toll that the customer ought to pay or should pay. It's a toll that the supplier has to pay because they're the ones messing with the Straits of Hormuz. So the person who's creating the harm, the person that's creating the danger, that's the IRCG, and so that's Iranian, and so it's only fair that the seller of oil out of Iran should be the one carrying that cost primarily.
All right. Hi, good morning, Mr. Batra, and good to see you. When taking your points on board, from an equity market standpoint, what the market participants will want to know is, are we bracing for a longer drawn battle? Do you think that this is the re-escalation that was feared by equity markets, but you're finding a couple of positives that, you have a president in there, Mr. Trump, that's taking action. So do you think this is the restart of the war and we should be in for a prolonged war? Your take.
Well, again, Iran is a sui generis case because most countries pride themselves on their structure of governance, and their structure is a pyramid. On top, like for example, the United States, even with separated powers, you've got the president of the United States as the head of the executive, and then you have a legislative head and you have a judicial head. But the executive is singular. In India, you have Prime Minister Modi, President Xi Jinping in China, or President Putin in Russia. So there is a hierarchical system. However, what Iran did since the 1979, American hostage crisis, and then the Iran-Contra affair, what Iran did is they intentionally compartmentalized governance. So there is, people say that there's 30 different pillars of governance within Iran, and each one is independent. They're vertical, and then they join at the top, so it's sort of a plateau. And especially when on February 28th of this year, when the war started, or the police action started, and most of the leadership was killed of that plateau, the problem, of course, is now who do you make a deal with? I am today of the view, personally, this is my personal view, that since IRGC is the one that's creating the problems in the Strait of Hormuz, it is IRGC we should be talking to, and maybe talking less to the foreign minister of Iran, because the foreign minister of Iran does not control the IRGC. And since the Iranian governance model is unique to Iran and no other country has it, other than perhaps the United Nations General Assembly. Think of the Iran being run as if it was the General Assembly of the United Nations. It's very difficult to do anything that way, very difficult to cut a deal that way. So I think it's IRGC that we got to deal with, because they're the ones throwing the mines in the water. They're the ones, sending out the missiles and the attack. So perhaps we need to do a switch and try making a deal with IRGC and let IRGC deal with everybody else in Iran. Because whatever we've tried so far, and everybody has, to try to come to some resolution, that is not working. So, I think President Trump may well take a look at IRGC and say, since you're the guys who are creating the internal bottleneck to the world and creating all this problem, maybe you're the one we need to cut a deal with. And we're going to, or else we're going to straighten you out, which is the only, peace and war is always a combination between, let's be nice or we're not nice. And it's always better to be nice if you can. And I think President Trump is the person who can bring people to the table, even those who are not willing or really want to make peace.
Interesting opinion. Thank you, Mr. Batra, for joining us this morning on CNBC TV 18.
Pleasure.
All right, let's tell our viewers the interactions lined up on the show today. 8:35, we've got Sandeep Agarwal of Suvilo Investment Managers to talk about HCL Tech's numbers, their data center foray, what it means for the industry. 9 a.m., we'll be joined by Keshav Lahoti of HDFC Securities to put the focus on consumer durables. 9:20, Sanjay Parekh of Soham Asset Managers will be the market master for the day. 9:35, we'll bring you a discussion around the power sector as Aditya Birla Group acquires Shell India's renewable arm. Following that, Amit Murarka of Axis Capital will be chatting with us at 9:50 to tell us what to expect from the metal earnings in Q1. And towards the end of the show, Lata will speak to the management of Bank of Maharashtra. Stay tuned.
Time to take a quick break. Got a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But here's the list. HCL Tech, ICICI Pru, Novoco, BEL, MQ Pharma, and Sigma Advanced Systems. They'll be reacting to positive news flow. On the flip side, Grasim, Biocon, non-coal miners, as well as, they'll be reacting to negative news flow, while crude sensitives should see a mixed start. We get in further detail on the other side of this short break.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Welcome back. You're watching us here on Bazaar Morning Call on CNBC TV 18. 180 points is what the GIFT Nifty is indicating as a lower start. Let's see whether we go ahead and see a recovery just the way we did yesterday. Now that cut has been lowered by about 15 points, 165 points. But a bunch of stocks on our radar this morning. And our team is always with us here on CNBC TV 18. Let's start with Nigel Grassim, the big acquisition that took place yesterday.
Well, that's right. Yesterday, out of nowhere, you had this big announcement that came in from the Aditya Birla Group. Now, Aditya Birla Renewables have acquired Solin Ergia Power. Remember, Aditya Birla Renewables is the subsidiary of Grassim. So Grassim will be the stock that you'll be looking at. The seller is Shell. In terms of the details. Further, in terms of the numerical details, the deal is done at an enterprise value of around 17,200 crores or thereabouts. And what about this asset that they've acquired? When Solin Ergia Power has a cumulative contracted portfolio of around 5 gigawatt. Part of it is operational, part of that will get operationalized as well. The turnover that they've declared for the last few years is ballpark around 1,100 to around 1,250 crores or thereabouts. It's been in that range. What's the rationale they've given for it? Well, it gives them an opportunity to expand the renewable energy footprint. Also, Aditya Birla Renewable Energy's portfolio moves from around 4.4 gigawatt all the way to around 9.4 gigawatt because they're adding 5 gigawatt by this transaction. And they're saying in the years to come from around 9.4 gigawatt, they want to even double that and move to around 20 gigawatt. The debt in the books, you'll be worried about that. Standalone basis, it's around 6,800 crores. That's in Grassim. And on a consolidated basis, which will include the other entities, it's around 37,000 crores. However, they go on to state that the acquisition will be funded by a mix of debt, equity from Grassim, so we'll have to wait for clarity on that front. And there'll be investment coming in from Global Infra Partners. That is a wholly owned subsidiary of BlackRock. And they're already invested close to around 2,000 crores in Aditya Birla Renewable Energy with a green shoe option of close to around 1,000 crores or thereabouts. So the contribution coming in from Grassim, the contribution coming in from this entity as well, GIP, will be watched for here. And they're saying by the end of this year, this transaction will close out. Most brokerages believe that maybe, in fact, it's a little bit larger and they'll seek further clarity. We could see a knee-jerk reaction because of the size of the transaction. So expect Grassim to open up in the red for starters. But the other big stock of the day could be Biocon. Sudarshan has been reporting that the large trade was expected. And bang on, Sudarshan, it's been announced. Tell us more about this large trade that we are expecting.
Good morning, Nigel. So Nimish has been highlighting about Biocon block deal for the last 2 weeks on his D-State chatter. And on Friday, we had announced that on Monday or Tuesday, Biocon may announce the block deals and in which Mylan is likely to sell its part or entire 5.64% stake for the value of around 3,500 crore. Now, yesterday book was launched, we understand from sources, floor price at a discount of almost 8% to yesterday's closing price. But if the block happens in the block window, we might see a recovery in the stock. Now, the question is how Mylan has got 5.64% stake in Biocon. So they used to hold stake in Biocon Biologics, and early in 2026, so in January 2026, part of the deal, being part of the deal, Biocon had acquired Mylan's stake in Biocon Biologics through share swap and cash. So through share swap, they were given the allotment via preferential basis of more than 6% stake. And now, as of March, 5.6% stake that Mylan held, now they are going to sell its entire stake via block deals, and that is, in all probability, might happen in the block window.
All right, take that point. Might happen in the block window. So that's about Biocon. Rima, HCL Tech. The tech stocks have been bouncing back. HCL Tech results better than what the street was expecting.
Yeah, it was not a bad set of numbers. It was actually a decent set of numbers, and a couple of internals were positive. One, the company recorded highest deal wins at $2.4 billion, and this doesn't take into account that $1.1 billion deal that they announced in July. So the company is saying the pipeline is on the stronger side. Secondly is the AI revenue. The AI revenue is accelerating. It's gone up 62% on a year-on-year basis. It still constitutes only 4.7% of the overall revenue, but it's growing well. And thirdly, the company also announced a foray into data centers, and the street is viewing this positively because the company is making a play for the AI ecosystem. So they said that the initial investment will be for 3,500 crore rupees, and they will be building their own AI data stack. But eventually, they want to scale up that investment and have a capacity of 50 megawatts. On the numbers, as I said, not as bad as feared. Revenues did decline by 0.5%. But the street was working with a 1% decline. Margins went up by 40 basis points to 16.9%. The company has held on its guidance. So all in all, the print is fine. The internals are okay. The only thing to bear in mind is this is a stock which has rallied 14% in the month of July itself. Remember, after it won that large $1 billion net new deal, the stock was excited. And with this outperformance, it's also now trading at a premium to its peers. So HCL Tech would be at 16 times, while an Infosys or a TCS would be at 14, 15 times after yesterday's up move. So maybe the stock has run up quite a bit. So we'll have to see how this plays out. But purely on numbers, okay.
All right, let's go across to Divyani. She's here to tell us about ICICI Pru AMC. Divyani?
Well, ICICI Pru AMC came in with an inline set of numbers. Now, mark-to-market gains have added to the PAT this time around, and quarter-on-quarter performance was largely steady, with a slight drop that was seen in the market share in equity as well as the overall average AUM. Now, on a quarter-on-quarter perspective, let's look at the metrics. Now, mutual fund quarterly average AUM was up 1.1% to 11.17 lakh crores, while equity quarterly average AUM, that was up 1.7% to 6.3 lakh crores. Now, market share across both dipped slightly with about 10 basis points of moderation in overall, while 20 basis points in equity, and systematic flows have dipped to 4.5% on a quarter-on-quarter perspective. So that's a slight negative. But coming to the financials, net revenue came in at 1,440 crores, up 1% on a quarter-on-quarter perspective, with net revenue yields which were largely stable at 52 basis points. Now, ESOP costs have added to the employee costs this time around, which rose 44.5% on a quarter-on-quarter perspective. But keep in mind, quarter 4 was a low pace to begin with, and EBITDA as a result dropped 3%, with margins healthy at 72% this time around. Now, PAT was up 26% despite all of this as a result of the mark-to-market gains, which came in at 181 crores of other income versus a loss of 90 crores in quarter 4. So all in all, an inline set of numbers, and keep in mind the biggest overhang, which were the yield impact as a result of the expense ratio changes. Those don't seem to have been impacted. So all in all, an inline set of numbers, going with a green on ICICI Pru AMC in trade today.
Thanks a lot for that, Divyani. I'm going with green as well in Nuvoco Vistas. The reason I say that because the numbers look quite good. Let's run you through a few data points. The revenue growth was close to 9%, and consolidated volumes came in higher by around 5%, coming at around 5.3 million tons or thereabouts. Realizations, that was the positive aspect. On a sequential basis, they popped up by close to around 7% or thereabouts. The exposure to East India, that's helped, and a good contribution coming in from premium products as well. That's what could have led to realizations popping up by close to around 7%. So they've got the benefit of higher realizations. And, it looks like the negative with regard to higher input costs, that's not really played out. But the operating profit looks good. That as well has come up by close to around 10%. And on an EBITDA per ton basis, it looks like they're focusing even on the cost side as well as getting the benefit of higher realizations. And that's why on a sequential basis, this is the calculated number, EBITDA per ton popping up by around 80 to 90 rupees, which is encouraging. With regard to the structural growth trajectory, they say that the Vadraj cement plant as well as the east region expansion that they had planned, that's what's going to take capacity to around 35 million tons or thereabouts. So put everything together, decent volume growth, a good amount of realization spike up and focus on cost side. The stock should react favorably, expected to open up in the green. We'll see how that goes. One of those underperformers from the cements pack, but starts off earnings on a positive note. Well, let's focus on another clutch of stocks. Sudarshan's tracking this very closely, actually. The non-coal miners and what's going on in Karnataka. Sudarshan, please go ahead.
So first, before I start and talk about this, let me say that this case is different from another cases between Karnataka government and central, and that case is still pending before President of India. Now, as far as this case is concerned, yesterday Supreme Court has rejected the plea, and that had challenged the mining rules requiring payment of royalty on royalty. Supreme Court holds that computation of royalty is constitutional and valid. So what was the plea? Kirloskar Ferrous had filed a plea challenging royalty computation, and that plea has got dismissed. They had said DMF, that is District Mineral Foundation, and NMET, that is National Mineral Exploration Trust, contributions are added to the sale value for royalty computation, and that plea Supreme Court has dismissed. So what's the impact? Who is going to benefit? State governments are going to benefit because they'll be the biggest beneficiaries of the royalty payouts by miners. As far as miners are concerned, Supreme Court decision dashes hopes for lower royalty payment, and also this decision reaffirms existing formula for computation of royalty. So can be mild negative for companies like Kirloskar Ferrous, NMDC and Vedanta.
That's right. Sentiment negative coming in there. If it went in their favor, it would be good, as Sudarshan saying. For the time being, no relief coming in. So sentiment negative for these companies. Let's go across to Vinny. She's here to tell us about some other stocks in news. Vinny?
Hi, good morning. First up, let's talk about BEL. They've received additional 572 crore orders since the last time they made the disclosure in June. So additional orders coming in for the company. These are some orders that include EVM batteries, tank subsystems, components, upgrades, spares, services. All these are different orders that they've received, but 572 crores additional orders, so some bit of a green on the screen. We have MK Pharma that could see some green as well after the company is buying out that remaining 12% stake that they have in a biotechnology subsidiary of the company already. So now this company, Genova Biopharmaceuticals, will become a wholly owned subsidiary. The transaction value for this additional 12% stake is around 231 crores. Let's move on to the next stock, and this last one for today is Sigma Advance. This is also a defense company. We're expecting green here. Why? The company has acquired a UK-based company which is called Bromford Precision Solutions. This is for 153 crore rupees. What will this do for Sigma Advances? It will strengthen its position in Rolls-Royce supply chain while complementing the UK division. So furthermore, growth and expansion on the UK-Europe side. Furthermore, the company plans to scale up the acquired company's capabilities in automation, selective transfer of components, manufacturing in India as well. So that will support the synergies in terms of growth for the company, and they're targeting an EBITDA margin improvement through capital investment as well as automation over the medium to long term.
Right, Vinny, thanks a lot for that. But no day goes without us looking at the crude prices, and Manisha joins in on crude sensitives once again. This time, Manisha, a 10% spike is what we've seen overnight.
Oh, well, absolutely. 10 to 11% of gains in the overnight market, with now the Brent trading above $84 a barrel. It's a one-month high that we're looking at in terms of the crude oil prices. The ceasefire between U.S. and Iran has all but collapsed totally, and there are various statements coming in from both the countries, with U.S.-Iran releasing statements asserting control over Strait of Hormuz. U.S. has reinstated blockade on Iran vessels transiting the Strait of Hormuz. It also has said that all other cargo will be subject to a payment requirement at 20% of the cargo, much higher than what Iran perhaps had initially initiated. Trump also has said that he's backing a Russian sanction bill to penalize buyers of Russian oil and natural gas. So not just the Strait of Hormuz and the Middle East oil supplies that I see are getting cut off yet again, but the Russian oil being sanctioned and buyers being penalized is something that also has added a lot of premium to the crude oil prices right now. The strength in US dollar index is yet another thing, and the markets do believe that we are perhaps going to be staying above $80 a barrel for the near foreseeable future. And most experts also believe that this U.S.-Iran peace resolution perhaps could drag on for another 6 to 8 to 12 months as well. So we are looking in for a choppy ride for the crude prices.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are HCL Tech, but we'll have to wait by to see the stock market reaction. ICICI Pru AMC, Nuvoco Vistas, BEL, MQ Pharma, Sigma Advanced Systems. Stocks with negative news flow are Grasim, Biocon, non-coal miners. Crude sensitives are likely to open mixed. Get into a break. On the other side, we'll connect with Sandeep Agarwal of Subilo Investment Managers to discuss the IT sector earnings and the key trends so far.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
Welcome back. Let's talk about IDBI Bank, because what we understand from our sources is that government has green-lighted the strategic divestment in IDBI Bank. Sapna joins in with more from what she's picked up from her sources. Sapna.
Yeah, exactly. So this is a positive move after quite some time. Previously, the fact was that the bids that had come in were probably below the reserve price, and the government was in a bit of a rethink mode. But having said that, right at the top, government has been indicating that the IDBI stake sale is very much on, and keeping that as a perspective and as a background. So yesterday, two high-level meetings were held. The CDD, the core group of secretaries on disinvestment, and that's headed by the cabinet secretary. They met twice. Alongside the IMG, which comprises of the actual administrative departments, that is DPAM, as well as financial services, TFS. They also met, and the fact that these are alongside back-to-back meetings, it definitely indicates that some decision has been taken on the IDBI stake sale. Most likely, the proposal will go for cabinet as well at the final stage. Probably a lot of internal stitching up and, fresh approvals will be required. We don't really know the substance, the actual substance of the meetings, but the trend is totally positive. The direction is totally positive. And, this basically gives a big push to the IDBI stake sale, which has just been stuck for quite some time. So that's what it is as of now.
All right, so that's an important, development out there. The government and LIC will sell about 60.7% stake in IDBI Bank. The green light has been given. Let's welcome our fundamental guest then, Mayuresh Joshi, who's the Director of Research at MarketSmith India, joining in now. Mayuresh, IDBI Bank and the banking space in general, if the government was to look at a strategic divestment soon, this is something that has been in the works for as long as one can remember. If this were to happen, who do you think would be best suited, and what would it do to the system?
Morning, Mangalam. I think, yes, we waited long enough for this divestment to probably take place. And if this does go through very, very positively, I think it will give that intent, because the government has been trying to divest over the last couple of financial years in terms of its key strategic assets. But it does give the right signal to the market that the government is intentful in terms of divesting some of its assets. And therefore, I think that will be a very, that should be a very positive signal to the markets that the other divestments that are probably in the pipeline might also probably see the light of the day. Therefore, I think if this does go through, I think this is going to be very, very positive as far as the divestment is concerned. And specifically, I think the FII goes towards India, because the divestments have largely not been happening. And if this does happen with regulatory concerns going off, I think the next steps that might happen is the next PSUs that might come in focus post-IDBI.
Mayuresh, hi. Morning. We're seeing one of the largest renewable M&A deals in India yesterday with the Aditya Birla Group buying Spring Energy from Shell for 17,200 crore rupees. It's nearly $2 billion. What's your assessment for Grasim? Nigel was telling us it could be mildly negative because it's a very large deal that they need to execute on. But will there be a rub-off impact on any other stocks? How will this impact the sector per se?
Morning, Rima. So yeah, I think that there should be some element of a negative connotation as far as Grasim is concerned, because that's a massive outlay that you're probably talking about. And therefore, from an immediate perspective, I think if the capital expenditure starts coming through, the capex starts coming through, I think the cash flows will definitely get impacted. And therefore, on that note, I think it might just have that sentimental plus the impact in terms of operating cash flows if there is a significant outflow that probably goes through. For the sector as a whole, obviously, I think a large part of the move in terms of even the environmental guidelines that a lot of companies are probably adhering to, and a lot of the renewable thrust that the government is embarked upon, both from a green energy perspective as far as solar is concerned, wind, hydro, where the tariffs have also gone up quite significantly over the last few years. Obviously, is a step in the right direction and meeting global goals as well. Obviously, what this has done in terms of expectations of how the renewable space will probably play out, specifically solar, I think if more capacity additions keep on going through, I think the tariffs might start probably tapering off. More supply coming through from an immediate short to medium term perspective. So again, I think renewable hot space, but we need to be very, very selective. I think hydro within renewable might continue doing well, and therefore small hydro specifically within that. But yes, Grasim will feel that pinch because of the heavy capital outlay affecting its space.
Right. So that's about Grasim. Mayuresh, have you made some thoughts on HCL Tech's performance and its stock price movement, its first quarter numbers? All of that in context with the industry outlook, what does it look like?
Mangalam, I think even in the last quarter, I think HCL Tech had given a reasonable set of numbers in the large cap IT names. Again, the transformational deal that they probably won on the AI front with the Mercedes, that will probably aid them going forward. And the guidance that they've probably kept, both in terms of revenue guidance and the EBIT margin, being a tad bit higher, in fact, substantially higher than what they probably reported in the quarter gone by. So I think that does give hope in terms of the sector as a whole about the kind of transformation that our IT companies are trying to probably make through. And some element of trust that is probably coming through in terms of AI deals that are probably being given to them. Even in TCS's case, I think the revenues have obviously gone higher. The order book, the TCVs are obviously moved higher. But yes, I think HCL Tech, good set of numbers, the commentary goes good, and therefore they probably execute well, along with the more that we probably see in terms of some element of inorganic acquisition as far as the AI space is concerned. I think it is one of the better performers in the large cap space as far as we see it probably.
Sorry, just getting back to the point about renewable energy. We've got large players. Adani Green Energy, I think, will still remain the sector leader, though now Aditya Birla Group will come in perhaps second with this move. But you've got NTPC Green, then you've got a lot of EPC players. You go down, you've got a Suzlon, etc., Vari. Which stock would you bet on here?
So, Rima, as I said, I think if you probably look at the space itself, right, solar, wind, and hydro, I think hydro probably is a tad bit better place for two key reasons. One, I think in terms of the tariffs that the government has probably reviewed for hydro projects, I think they are steps in the right direction. The second element, I think, is in terms of small hydro itself. So I think if you probably see the construct, anything below 25 megawatts, so that probably comes through, has a better tariff that probably comes through, and there is no fixed commitments on the company side itself. And therefore, what you probably see in terms of hydro companies is that they're probably bidding in, not for those mega projects that are probably coming through, but the small to medium projects is somewhere which probably becomes very, very viable for them. And therefore, I think hydro within the renewable space, when you talk about SJVN as an example, in my opinion, I think it might continue delivering better set of points.
Hydro would be NHPC, SJVN. Are these the two plays in India?
Yes, I think when you talk about larger, well-capitalized stocks.
Okay.
Yeah.
And are there any small or mid-cap plays in hydro renewable energy space?
They are, but I think there is issues in terms of market cap and liquidity, Rima. So I think it becomes very, very difficult to probably go out there and buy very, very aggressive policies.
Okay. So the way to play it would be still the larger players, well-capitalized players. Regulated though, but NHPC and SJVN on your radar. Mayuresh, we'll come back to you. Just want to quickly put the spotlight on IT earnings. HCL Tech. We have with us Sandeep Agarwal, fund manager at Sovilo Investment Managers, now joining in. Sandeep, first, HCL Tech's data center foray. It's small, initially a 3,500 crore commitment, but their plan is to scale up to 50 megawatts. And what they clearly said is that this is not a power space, a rental kind of an agreement. What they want is that we will provide you the infrastructure, but we will also additionally provide you the AI intelligence, AI as a service on top of the infrastructure. So that is going to be the differentiated play to tap into the sovereign AI theme in India. What have you made of this interest in data centers by IT companies? Because it's not just HCL, even TCS had announced Hypervault. And what does this mean for the return ratios? Because services is very different from infrastructure.
Hi, Rima, good morning. So, all these companies, I think, are in the right direction. I think all of them, the large ones definitely, who has the balance sheet, they will move into this direction because they have the capability to add the intelligence value. And if the infrastructure is managed and built by them, the comfort for the client and comfort for them to manage also goes up substantially. In terms of return ratios, as you already hinted that, the return ratios of services are very, very high because the desk cost is recovered probably in the first 8 or 9 months. So the ROEs, X of cash, are huge. You can't have those ROE and ROCs in this business. But let me tell you, the highest ROC and ROE also in this data center business will be with the IT companies, primarily because they will be able to add high-end services and intelligence layer to it, which other players who are doing pure data center, probably they will get the rental yields or some bit of, some benefit over and above that. But I think pure vanilla data center players who are mostly from the real estate side, they won't make big money in the long term because it will become very commoditized. But the IT services company, which are now foraying into that space, they will do phenomenally well. And I think, people have, again, I would reiterate at the cost of being repetitive, that people have confused disruption and cycle as one word. Disruption is separate, cycle is separate. And this is a disruption which is a combination of hardware and software, which never ever has happened in the last 30, 40 years. And that is the reason people are confused. They are not able to form view. In my view, all these companies will do phenomenally well. Just wait 6 to 12 months, you will see good numbers coming in from these companies.
Making that point, Sandeep, and you have been bullish on the IT sector per se, but just getting back to the point about return ratios, what are the current return ratios of services companies? And as their business model changes, whether it's a pivot towards little bit of products, outcome-based, or maybe even these data center investments that the companies are making, and there is a fairly large outgo as they scale that up. What would the return ratios look like, say 5 years down the line, today versus 5 years, if you had to give a broad range or guess?
So, Rima, the right way to look at it is that, right now, when I was an analyst 4 or 5 years back, I used to see return ratios X of cash because you can't take into cash into net worth to calculate the return ratios. It is little unfair. You have to replace that with a slightly better investment, and I think this is a much better investment. So if you are making 5-6% on the fixed deposit, which these companies we are keeping with the large banks, this business will definitely be upwards of 20-25%. So your overall ROE, ROC going forward, if you include cash, then it will definitely improve by 7-8%. Standalone, this business ROE, ROC will be 10-15% lower than the services. But on a whole, because now you will be distributing less cash, your ROE, ROC should go up.
So some numbers here. Sorry, you're saying this business going forward will give you 10-15% ROE, ROC.
I think more closer to 20.
No, services today is giving you, what are the return ratios?
Services today is very confusing because, you have to, I think you have to reduce, take out the cash to calculate the return ratio. If you do that, then all are almost 35-40% unless there is some acquisition which has come in and dented the ROE, ROC. So pure vanilla, any company, IT company should be at 35-40% ROE, ROC if you exclude the cash and they have not done acquisition. On the overall basis, including the cash, most are at 20%. So this business which is coming in will be, closer to 20. So overall, I think still it will improve because your cash will go out. The less amount of cash will be distributed, more will be diverted to these businesses.
Okay. Any other trends, Sandeep, in the numbers from HCL or TCS that stood out for you?
So, Rima, I would only say that, this is the time to, we have been very bullish for last 2 months and, from there also stocks have fallen, to be honest. But I see that, next 18 months will be phenomenal. As I have said earlier also, if you do the EPS number, most of these companies should give you 45-70% cumulative EPS growth in next 3 years, which turns out to be 12-13-16-17% CAGR of EPS for 3 years, which is phenomenal. How many companies in Nifty at that size, that corporate governance and that balance sheet can give you that? So I think even if the sector doesn't re-rate, you will make 45-70% in this sector in next 3 years, which is a phenomenal return in my view.
Okay. And mid caps versus large caps, because mid caps are also making some large bets, M&A bets, Coforge and Encora, and it's still playing out. Persistent with Nagarro, while it's a high return, high risk kind of a play now.
So, Rima, you should not see right now, mid and small, large and small. That was the time till 2021 and prior. Now, post that, because deal sizes have got shrunk, everyone is able to participate in any deal. So the mid, large and small, and in fact, small and mid cap are at a more advantageous position in last 5 years versus the large cap. And it will further, the advantage will move towards small cap also. So the right way to look at is the technology stack. I think ER&D companies will be at receiving end for at least next 6 to 12 months, primarily because there is a slowdown in some of the verticals in the manufacturing side where they are. Secondly, remember that, AI disruption is highest in the manufacturing side and ER&D of the product. So wherever there is ER&D involved, the AI disruption is highest. So I think that is not being discounted. Having said so, I believe ER&D as an industry has to grow at a faster pace than IT services because IT services penetration is very, very high while ER&D penetration is very low. But then the stocks are also at very high PEG ratio. So I am not comfortable with any ER&D company, but non-ER&D IT services, I am very comfortable. I think, across the board, good money has to be made in this sector.
Sandeep, you think 2 years down the line, people will be sitting on hefty 40-50% returns on tech companies, select tech companies who have already got badly beaten down?
So, Nigel, I will say you this, that, in next 2 to 3 months, you will see a lot of upgrades from the analysts who will catch the first leg of the uptrend. And then there will be upgrades in next 12 months by the analysts who have recently downgraded the stocks at the bottom of the cycle. That is what my view is. Because, as I said, this is a cycle which no one has, including me, has not seen in last 30-40 years. It is a combination of hardware and software which has never happened. So we are all confused, and that is the reason we are not putting appreciation to the work which Indian IT companies are doing. You just see next 6 months how numbers turn out. And let me tell you, market is extremely smart. The EPS growth of 45-70%, if they find that in next 1 month, 2 months, the stocks will not wait for 3 years to give you that return. Right. So market will always discount in much ahead.
The reason I'm asking you this is because you were very bearish on the companies and, that played out very, very well. The stock saw a sharp correction. And now you've turned the corner, and the last month or couple of months, I think you've turned quite positive on prospects, and now you're in the bullish camp. Though, as you have mentioned numerous times in the interview, that you're not an analyst any longer, but you're maintaining a positive stance now on tech names. Yeah, Maglam.
You know, in the past, he said that you spoke about 45-50%. His math is that it would be about 65 to 70% returns as well. Very recently, he had, made that call. So obviously, the street, he is betting on the IT pack.
Okay, all right.
ER&D.
Okay.
X of ER&D.
All right, that's thanks a lot, Sandeep, for joining in, giving us that view. Always a good chat with you, and we look forward, in the time to come, to keep getting your updated view on the sector. For the time being, you're in the bullish camp.
Thank you.
By the way, keep an eye out on the bottom of your screen, that large trade on Biocon, that's taken place, important. It's happened in the block window. And now it's going to be very, very interesting. I'll tell you what, because there were some shots that were, built up in anticipation of this block. The pricing was at a discount, but that was on expected lines. Now those shots, they may have to scramble for cover because the deal has taken place in pre-open. So Biocon, after a bit of an underperformance in comparison to the farmer index in the last few months, it could possibly be the stock of the day. And Vikas Kemani as well, yesterday when he joined us on the show, he was talking about their bullish stance, which is official, with due disclosures, that they have been fairly optimistic on the prospects of Biocon, not giving a time-wise, recommendation, but saying that the prospects of the company are good from here on. That's out of the way. Keep an eye out on the stock. And post-market hours, when you look at the institutional numbers, they'll be impacted by around this 1,850 crore rupees or thereabouts.
Just a word on this thing, where the floor price was at an 8% discount to yesterday's close. But the fact that it's happened in the block window implies that the price difference is not more than 3%. So block window allows you to do a trade only if it is within 3% below or above the previous close price. So obviously, the deal has been done at a much higher price than the initial discount. So which provides proves that maybe one, there was strong demand for this, and secondly, at the same time, the shots which would have will run for cover.
And I think Sudarshan was giving some feedback that probably there was a good demand as well for the company. So we'll keep an eye on that. We'll get you further analysis. For the time being, we'll slip into a short break. On the other side, we'll continue our chat with Mayuresh Joshi. We'll also get in our technical experts. Stay tuned.
Welcome back. You're watching us here on on Bazaar Morning Call. Mayuresh is still with us. Mayuresh, your thoughts on the jewelry space? Kalyan Jewellers in particular has rallied about 50% in the last 4 trading sessions. It's interesting because, when it started rallying. The discount that it was trading to Titan was about 70%. Now it's at around 55%. At peak, it's narrowed to about 40%, 35 to 40%. Where do you see Kalyan Jewellers and all the other jewelry companies right now?
Mangalam, it's a phenomenal move by Kalyan, no two ways about it. And the numbers were pretty decent. But I think it's probably do a comparison with how Titan delivered. He disappointed on that day itself, but it recovered very, very fast. However, our take is still very clear. I think the leadership stocks within the space, Titan is something that we still continue to like.
Numbers have been phenomenal, and they are probably changing and tweaking the product mix as we see more amount of wedding jewelry brought in with better margins as well. And therefore, I think the expectations in terms of a steady state of growth might actually continue. The other stocks that we like within the space of Mandamai, that stock has given phenomenal moves over the last few weeks as well. So I think as an actionable idea at this point of time, I think Titan probably still among the large cap leadership stocks.
All right, take that point. Thanks a lot, Mayuresh, for joining in. We'll leave it at that today and take a short break. On the other side, we have the pre-open rate, and also with us will be Keshav Lahoti of HDFC Securities to focus on the consumer durable space.
Well, just a minute or so. In a few minutes, we'll get the more concrete rates. For the time being, the pre-open rates are suggesting we're going to be pulling back to kickstart trade. That's unexpected lines going by the global backdrop and the spike that we're seeing in crude oil prices. Let's welcome Sudarshan Sukhani as well as Mitesh Thakkar on the show. Good morning, gentlemen. A bit of a challenging trading session is up ahead. Yesterday, we got lucky. There was a good recovery from the day's low. But how do you approach trade today? Sudarshan, you go first. Would you be looking to buy into this dip?
Good morning. No, that was yesterday. Every day is different. We were winning buyers at the dip in the morning itself. Today is unlikely to be the same for two reasons. First, the market has already digested some of the gains. It found a dip, it bought into it. That's the end of it. Second, today is also FNO expiry, weekly expiry. And we have noticed that weekly expiries can do strange things to the Nifty. So today, the trade is you wait patiently for a very significant and sharp dip if it comes about. That would be somewhere around 23,800. It may not even come about. In that case, there is no trade. If you find the Nifty between 800 to 900, that's 23,800 to 23,900, somewhere in that range, go and take that chance and buy, not otherwise.
All right, 23,800 and 23,900. Mitesh, your call on the index. I mean, between yesterday and today, the big difference is oil prices. They've spiked by about 10%.
Good morning. Yesterday's recovery was slightly surprising because I still believe that the market is kind of non-directional in the sense that the indicators, the volatility oscillators are turning flat. So I broadly believe that we'll do a range of 23,800 to about 24,300, 350 thereabouts. And therefore, it will be more of a consolidation kind of a period for the next week or a couple of weeks ahead. The idea is that the bank Nifty also, needs to close above 58,500 for a fresh breakout. That's not happening as well. We've had about 2 attempts in the last 3 weeks over there. And therefore, I think, these trends required for a breakout is missing. And on the downside, we are seeing repeatedly support coming at the 10, 20-day averages, which is close to 23,800, 850 zone. So I think it will be mostly a sideways consolidation. Don't trade in the middle of the range, but as you get to the edges, you will find a trade on the long side if it's the lower edge, and on the short side or profit booking if it's the upper end.
Understand that. And this morning we'll also monitor the rupee, because over the last 2 trading sessions we've seen the rupee weaken from 95.3, yesterday closed at around 95.6, and this morning straight off the bat it's opened closer to 96. The rupee has been very, very well behaved for the last month or so, but will a fresh spike in crude prices cause another worry on the rupee or not is something that we'll be tracking very closely. So Darshan, your individual stock trades?
Well, Angel 1 is a buy with a stop under 335. And for all of them, you have to adjust the stops depending on the gap down. And Bank of India is a buy with a stop under 140. HAL is a buy with a stop under 44.25. And this tells you that if there is a dip, I'm a buyer. Wait for that dip. Patanjali is a sell with a stop above 415.
Right. So you have 3 buys and a sell. Mitesh, your calls?
I have 2 buys and 2 sell side calls. On the buying side is Blue Star. If you get it around 10-15 rupees lower than yesterday's close. So around 1705, buy with a stop at 1688. Look for a target of 1755. And Coforge, if it starts to get past yesterday's high of 1547. So buy above 1548, keep a stop below 1525. Look for targets of 1600. On the sell side is BDL, Bharat Dynamics, with a stop at 1321 for targets of 1260. And Dr. Reddy's, it's at a pivot level of 1230. The closing was 1234. Most likely with the gap down, you'll see the stock open below 1230. So sell below 1230 with a stop at 1251 for a target of 1190.
All right, take that point. Thanks a lot, gentlemen. We'll come back to you in a very short while. Meanwhile, let's also welcome Keshav Lahoti, who is the research analyst at institutional equities at HDFC Securities, specializing obviously in consumer durables. Keshav, a whole host of things to speak to you about, but let's start with Voltas, because we understand that the company has taken price hikes by about 2.5 to 3%, and this citing higher raw material costs and increased demand. If you could give us a sense on whether your channel checks confirm this. From the start of this year, what has been the quantum price hike, and especially the timing, because you usually don't see all these companies take price hikes post the peak summer season. So do you think there's demand which is strong enough to justify this kind of price hike? And what's your outlook? What's the demand channel check suggesting?
So firstly, good morning. Thanks for having me on the show. So as you already, correctly highlighted, now we are, off season. Normally, we don't expect price hike to play out in July. But yeah, our channel check confirms Voltas have taken a 2 to 3% price hike. Now, talking from the start of the year, the price hike in RSA industry has been around 10%, but that has been taken to offset the table change, and the high commodity inflation. But still, whatever the price hike industry have taken is not sufficient to pass on the entire cost inflation. Still, industry need to take more 3-4% price hike to completely offset the cost inflation. So I think this price hike was required, because on demand side, demand is doing fine. Last year base is good, low. This year demand has been pretty healthy. The summer has been pretty hot. We are also talking about El Nino. Even the IMDb has forecast this time the rainfall will be 90% on long-term average. Currently also the rainfall is 18 to 14% deficit. So demand trends are healthy. Demand is not a concern, but we are surely cautious on the margin side because of the cost inflation.
Okay, all right. Got that. Hi, Keshav. Good morning. Good to see you in. Keshav, what do you make of, Amber's announcement that they made over the weekend? They had that subsidiary that they're looking at now unlocking some value probably, and probably looking at an IPO. What kind of valuation matrix are you giving to it? That's the entity that's growing at a faster clip as well.
Hi, good morning. So right now Amber have also announced it. In fact, they have firstly done the Oppo transaction. Now on LG side also they have announced the bonus shares and all this thing. We think the company is well preparing themselves for the IPO. Surely once you come for the IPO, your stock price needs to be to where, share price can't be very high. I think that is what they are preparing for. I think LG in electronics is what IPO industry will be looking for it. But it's, a lot of acquisition has happened through LG. Number have done 3-4 acquisition last year. I think let's wait for the time, then we'll see how the things will shape up the time when the company will be ready for the IPO. I think it will take a few quarters. I think that time it would be, more appropriate to talk. And secondly, there is still, unclarity for us whether Oppo will be through LG or Amber. So that will be also the deciding factor for the valuation.
Right. Speaking about deciding factors for valuations and deals with global companies, Dixon, the long-awaited JV with Vivo was given a nod, and the company has said that they will start production in a month or so. While volume estimates are ranging from, multiple brokerage houses, I just wanted to understand, what are you penciling in for this year and the year after in terms of both volume and revenue? And do you think people will now look at Amber once again because of the Oppo deal and the Vivo deal from Vivo JV from Dixon may not get that kind of eyeballs? I mean, we're just trying to understand how investor behavior would be.
Firstly, talking about Dixon, so long term, the JV was pending for a long. Finally, they have got the approval. So Vivo does 35 million volume in a year. Management have highlighted 2/3 of the volume, that is 22 million, will come to the JV. So as we understand, the JV will take still 40 days to start the commercialization and all this thing. We understand now Dixon will buy the plant of Vivo also. So for this year, we are penciling a volume of 9 million. And next year, we are modeling a volume of 20 million for the Dixon. Now, talking about Amber, so whether Oppo deal will have an impact on Dixon in the near term, the answer is no. Because whatever the volume Amber got it's not offsetting the Dixon. It's from their, internal production, whatever they do. But in the mid to long run, we believe surely Amber entering in the mobile space is possibly, they won't be just restricted to Oppo. They will possibly try more clients maybe 2-3 years down the line. So surely the impact will come, maybe not in the near term, in the mid to long run. And Amber entering on the mobile space is positive for Amber because earlier they were gaining market share on RAC side, the outsourcing was increasing. But Amber's 2/3 of the revenue comes from RAC side. Now the industry is expected to grow by 15%. There is not much scope to, outperform the market. We believe Amber will grow in line with the market. So possibly to shoot up the growth rate, Amber might have decided to get into the mobile space because earlier in the RAC side, the company was growing by 25-30%, which no longer we expect it to continue. Just for example, last year, Amber was guiding in RAC industry side, they'll outperform the industry by 10-15% for FY26. And this year, they have clearly articulated they will grow in line with the industry.
Okay, all right. Final question, Keshav. Getting into market opening, top 2 picks?
So our top 2 picks on durable side is Orient Electric, and we like Eureka Hopes also. And on EMS side, our top pick is Sigma. Although stock have done pretty well, we have released a report on December, a deep dive. There, the stock have given more than 50% return. But I think someone can wait to make an entry in Sigma, but we like the long-term story of Sigma.
Got it. Appreciate you joining in, Keshav. Thanks a lot for giving us all those cues. Wishing you a good day ahead, and we look forward to chatting up with you rather soon. By the way, keep an eye out on the bottom of your screen. That entire recovery that we saw in the rupee, that's got sold into because the rupee, after recovering all the way closer to around 94 odd, that's moved back above the 96 odd marker. I think on the verge of moving to those peaks that we saw earlier. I think that was closer to around 97 or thereabouts. But the rupee has weakened to start trade today. That's a bit of a sentiment negative. So let's see how that goes. Well, 9:10 a.m. Sudarshan joins us to give us his call. Sudarshan, you go first.
Well, it's HAL. Buy HAL with a stop at under 44.25. Adjust the stops according to the gap down.
Okay. All right. Mitesh, what about you?
Yeah. I go with the sell on Dr. Reddy's if it breaks 12:30.
Nigel, wait, before we go across Nigel, Sudarshan, speaking about Biocon, it's, it's moving fairly well in pre-open, settled much higher.
So entire 9.2 crore shares that we are talking about have changed hands in the block deal window. Mylan has sold its entire 5.64% stake, so major overhang is gone. Now, as expected, that has happened in the block deal window, and that tells you how the demand was. The floor price was around 378 rupees per share, and the deal for the entire 9.2 crore shares, or say 5.64% stake, has happened at the 5% higher to the price of 378, and exactly the price at which it happened was rupees 400 per share. Now, just if I can give you the background, Mylan was given or allotted the shares in Biocon for the stake that it held in Biocon Biologics, and as per the deal done in January 2026, Biocon had announced deal for Biocon Biologics via share swap and the cash. So because of share swap, Mylan was given almost more than 6% stake in Biocon. Now the entire stake Mylan has sold. Mylan has exited the company, and overhang is gone. And because of the deal happening in block deal window, Biocon stock is sharply higher in pre-opening session, up almost 4%.
Got it, sir. Thanks a lot for that. That could probably be the stock of the day, opening up close to around 4%. The shorts as well could have to run for cover. Let's focus on Grasim. Now, late last evening, Grasim subsidiary Aditya Birla Renewables, they have acquired Solenergy Power from Shell PLC. And here are the details. The deal is done at an enterprise value of around 17,200 crores or thereabouts. The acquired entity, which is Solenergy Power, has accumulated contracted portfolio of around 5 gigawatt. Part of that is, most of it is functional, and some part of that will get operational as well. The turnover for the last few years has been in the vicinity of around 1,100 to around 1,250 crores or thereabouts. And normally for these sort of businesses, the margin that you're assuming is around 75 to around 80%. What's the rationale? Well, it gives them an opportunity to expand in the renewable energy footprint. It increases Aditya Birla Renewable Energy's portfolio from around 4.4 gigawatt. They go all the way to around 9.4 gigawatt, and they've set their sights on doubling from there, targeting close to around 20 gigawatts over the next 3 years or so. The debt in the books, well, standalone entity is around 6,900 crores, consolidated entity is around 37,000 crores or thereabouts. How will it be funded? That'll be top of mind, right? They're saying there's going to be a mix of debt. There'll be some equity that will come in from Grasim, and there'll be some investment that will be coming in from Global Infra Partners as well, which is a subsidiary of BlackRock. And just in December 2025, JIP, they had put in close to 2,000 crores in Aditya Birla Renewables with a green shoe option of around 1,000 crores. That valued Aditya Birla Renewable Energy at around 14,600 crores. Transaction should close out by the end of this calendar year. Citi, they maintain their buy rating. They understand that Grasim will have to raise some debt. They believe that the stock could react negatively in the near term. While Morgan Stanley, they have an overweight rating. The target price they have around 3,900 crores. They see this development as a positive one for both Aditya Birla Renewables as well as Grasim, because the deal provides immediate scale in comparison to any kind of greenfield development that they would have done. And they scale their capacity to around 10 gigawatt. Put everything together, stock opens up mildly in the red. We'll have to keep an eye out on how it progresses from here on. Big deal nonetheless, 17,000 crores.
All right. Thank you very much for that. And the bell has gone. And the Nifty has opened with a cut of 150 points at the 24,060 level. 0.6% lower on the Nifty and the Sensex. The Nifty Bank too down nearly 380 points. A similar 0.6% decline on the Nifty Bank. The level to track will be yesterday's intraday low of 24,000, from which the markets rebounded to ultimately close up at 24,200. But this morning, given the standoff at the Strait of Hormuz, crude prices now back at $85 per barrel, and so much uncertainty in the Middle East, we have a gap down opening, still hovering around 24,200. So what's taken a knock? Well, it's HCL Tech. Numbers, as we said, are fine. But the stock had already run up 13% in the run-up to the numbers in the month of July. And on account of that, valuations at 16 times were at a premium to an Infosys TCS. CLSA Citi have downgraded the stock on the back of that. They believe after the run-up, the stock was fairly valued. Interglobe Aviation is a drag today. That's down 2%. L&T, with an exposure to Middle East, is taking a knock, 1.5% down. Asian Paints, all the stocks negatively impacted by the rise in crude prices, are on the back foot. Auto names are weak today. M&M, Tata Motors Passenger Vehicles, down 1.5% approximately. In the banking names in the NBFC complex, it's Shriram Finance, 2.3% down. Kotak Mahindra, 1.2%. HDFC, ICICI Bank also lower by 1%. On the way up, it's Hindalco, that's a top gainer, that's nearly up 1%. ONGC is holding up in the green. Nestle is resilient, that's up nearly 0.5%. But way more red than green. The advanced decline ratio to begin trade with
has about 2 stocks advancing for 5 stocks declining. But it's not falling. After that opening lower of about 130, 140 points, we're still there. Let's see how the day progresses. But HCL Tech is the big loser now, 2.5% down.
Well, that's right, Rima. I think the stock of the day and the stock of yesterday as well as today is Just Dial. In 2 sessions, it's put on close to around 30%. So big move is what we're seeing out there. Fino Payments Bank yesterday was up. Today, in fact, it's seeing some follow-through banks. So that's up close to around 6% as well. Kalyan Jewellers, as Manglam was telling us, there was that bit of a valuation gap. And the valuation gap is still there, though not as much as what it was, say, a few trading sessions ago. So that stock as well continues its good run. Massive move out there. Novoco, well, starts off on a positive note. You have the East India prices that were good. Good pricing improvement of around 7%. You'll await clarity on this front. Remember, the stock has been a rank underperformer, but now they've got scale as well. So that stock up close to around 6%. I'll be interested to see whether or not it can hold on to these gains. That's going to be important because in the past, sometimes the pops get sold into, but that stock, numbers look good. Starting off the cement pack numbers on good note. So that stock is up. Concord. Sudarshan tells me that, in fact, out there, the volumes are better than expected. And that's why that stock is up and about in today's trading session. It's opened up with a gain of around 5%. It's half from the top, but that stock as well continues its good run. Biocon could probably be the stock of the day. That's up and about in today's trading session. And, no one wants a war. But if there is a war, then there could be lack of gas supply. If that is the case, if there's going to be some restricted movement as well, then aluminium could be in a bigger deficit. That's the way the street looks at it. And that's why you have a stock like, say, Nalco, that corrected from around 450 all the way to around 330 rupees. For starters, that's one of the top volume movers today. It's up close to around 2%. In the near term, maybe the street believes that aluminium prices at least could get some kind of support on that front. So that could be one of the stocks that we're looking at. PDS as well, some positive news flow that did come in. Stock up 10%. Big move on that name. Manglam.
Indeed, a multi-year sourcing partnership with a French retailer is what PDS has signed, and that explains why the stock is up 10%. On Container Corp, the disclosure of physical volumes happened in the dying minutes of trade yesterday, and that's why the stock is higher by about 5.5%. So the actual volume growth for the company has been around 8.9%. Exim volumes 9.8%, domestic volume 6.17%. This, on an absolute basis, is much lower than what the street was, earlier working with. However, the management guidance at the end of the first quarter was obviously, scaled down. So on lowered guidance expectations, this company has met them, and that explains why we're seeing a bit of a pop. But as you pointed out, the stock had once half from the top as well. Biocon is now adding on to those gains. And, Kalyan Jewellers is not the only jewelry company that is surging right now. We're seeing some traction on Thanga Mill jewelry as well, up around 3%. We continue to see some purchase on Blue Jet Healthcare as well, been a big mover this month, up around 18%, seeing another, 2.5% sort of gain come by. Happiest Mind, the stock surged yesterday. Vivek had broke the story that maybe, one of the buyers of Ashok Suta's stake could be ITC, the infotech company. But Happiest Minds finds another set of buyers today, up around 3%. On the way down, we are seeing some decline in, players like Lodha Developers and a lot of the real estate players, which had seen a big move earlier. But now, with geopolitical uncertainty coming back, we have seen, some of the profit booking on these real estate names. CEAT is low by about 2.5% as well. Typically, a user of crude as a raw material, so tire companies are lower. And finally, we have Bajaj Consumer reported a stellar set yesterday, but the stock continues to sell off because this stock had already rallied about 190%.
Couple of initiating coverage reports as well. Investec, they've initiated coverage on Seshasai Technologies, target price of around 430 rupees. The stock has opened with a gain of around 2.5%, but just to alert our viewers, in the last 1 month, the stock is already up close to around 20%. So a bit of a pop is what you're seeing out there. Volumes as well picking up. But if you pull up a last 1 month chart, there's an initiating coverage report that's come in overnight from Investec. But the stock as well has seen some kind of rally in the last month or so. Yeah, it's up close to around 20% in the last 14 days. And the other one is Privy, I think so. DAM Capital, I think they had come out, or Incred actually had come out with an initiating coverage report on Privy Specialty. That one as well is up close to around 2% as we speak. Volume's not very, very high though on that particular name.
Well, TCS continues to see buying from yesterday, adding on another 2%. Yesterday up 6%. Infosys in the green, Wipro basically money which had gone into HCL Tech because HCL Tech was growing faster than peers, perhaps is getting reallocated back to some of the other large cap companies like TCS and Infosys, which were trading at a discount to HCL Tech. But let's invite Sanjay Parekh, founder, CIO of Soham Asset Management, on the show. Thank you very much for joining in. Sanjay, just when we were getting comfortable with the idea that maybe the Middle East issue is behind us and crude has settled between $70 to $75 per barrel, there come the latest skirmishes. And I'm reminded of that conversation that we were having with Vikas Jain of CLSA. And he said that it's difficult to see how peace actually comes back in a sustainable way in Middle East. And therefore, he says that adopt a barbell strategy. Have some hedges in the event that the situation continues to worsen. Is that the way you all would think of constructing your portfolio? Play for both sides. Things stabilize, improve. You've got a few plays, and if things get worse, his idea was play the upstream names, even aluminium names, and they're all doing well today, Hindalco, Nalco. Would you have some hedges in your portfolio?
Yeah. Good morning to all the viewers, Rima. So, yes, it's painful, right? So we were towards the resolution, and again, it's escalated. So, certainly we'll have to go through the pain, and till the time this is totally not resolved, because it has linkages to crude and supply chain. I think crude at 80, 85, we can still manage, but the supply chain on a longer term and the risk that it can further flare up is where market is worried. So I think market, till the time we get a proper resolution, market may consolidate for a while. But on the question on, at least on our side, what we've done is we moved up to large cap. We said that which are the leaders which are better off. And then you write that we also had hedges through, Vedanta Aluminum or, even metals, Vedanta standalone. And you do get, even Reliance, we believe, is better off in the sense it's not, it's not going to get negatively affected. So some of the large players is what we invested in. And then leaders which will get less affected, like some of the telecom names, barring the crude part, which the diesel price in the tower generally is insulated. So that's where we positioned our portfolio, and it's worked well till now for us.
Okay, so you're protecting your downside with investments in a Reliance, a Bharti, a Vedanta Aluminum. Am I correct?
Yes.
Okay, what are the other changes that you've made to play the upside, capture the alpha in the last 2 months?
Right. So I'll tell you our portfolio positioning, and these are disclosures that we own it and, in our portfolio. So we have Mahindra and Maruti as leaders. We have Samvardhan Motherson. We have Adani Port in the port segment. In telecom, Bharti is a big weight. Reliance is a large weight in E&P. And then, Grasim, we wanted to participate through Ultratech. So we have small weight Grasim. Sun Pharma, we have in pharma. Again, as a hedge, it helps us. IT, which, you always been covering so well, we've increased our weight to IT recently in the fall. We've added Coforge. We increased our exposure. And so we've reduced our underweight, but we've increased the weight to IT, to Infosys, which was our existing holding. So that's where, our overall, and then real estate we like because the opportunity is pretty large. So we do own DLF, and a recent entry we've done into Lodha, that is around 15 days back. So that's the way most of, and then Lenskart, which is broadly insulated or eternal, we have small weights. So this is how our portfolio is positioned, which has helped us as a large cap buyers and avoiding the fall. That's the purpose we've achieved.
Right. Sanjay, good morning. Thank you for joining us. Since you spoke a little about Grasim and the play via, Grasim for Ultratech, what is your sense on the deal that came by yesterday?
Right. So it's just initial, we need to get the details, but broadly, I understand it's around 8.5, 9 times EV/EBITDA. The EBITDA is not yet known, but based on the capacity, when they go full stream at 5 gigawatt, ideally the renewable play, 17,000 crores, the EBITDA should be more like 1,800 to 2,000 crores on a full scale basis. And in renewable, it don't take time to complete, right? So this should be 12 to 18 months far off, and then the entire 5 gigawatt hopefully should get completed. So it's very reasonable at 9 times, 8.5, 9 times. We don't have the numbers. These are our workings. And the existing portfolio is there in place. So they want to build this. Even the existing capacity, as we understand, is taking time to ramp up and contribute meaningfully to the EBITDA. So the whole piece meaningfully will contribute 12 to 18 months ahead. But certainly overall, from a strategy point of view, we're not worried about it.
Do you think it could be another value unlocking opportunity, Sanjay? Do you think at some point of time, Grasim, that was traditionally only into VSF as well as chemicals, now suddenly you could probably expect some value unlocking in the coming years? Say in the next 5 years, you could possibly see value unlocking in paints. You could possibly see a renewable energy vertical as well getting listed, because now it's got that scale as well. It could be a 10 gigawatt in the next 18 months or 24 months or thereabouts. We'll wait for clarity on that. And then scaling to around 20 gigawatts. Your take?
Yeah, Nigel, you're right. So paints certainly has done well. Market has started to attribute a reasonable value, on EV2 sales because profits are yet to come. But they've certainly done a very good job there. And it's still work in progress. Of course, the structure is that today they own 100%. How the structure in future will remain, we yet to see. The renewable piece is recent. They already had a 4 gigawatt plus capacity, but yet that also has to show meaningful EBITDA because some of it, as I understand, is through group captive. Some of it is so the overall platform was valued at around 14,000 crores recently, and so it's still meaningfully yet to contribute. So we want to see the contribution and EBITDA in 2-3 years, which should come through, and then maybe derive a proper value. But for now, we're not ascribing a very big value towards this renewable piece.
Okay, all right. Let's talk about the telecom stocks then. We're going to be having a big Jio IPO later this year. And that sector could actually come back to life because you'll have the big IPO there. Street is looking forward to maybe a possible tariff increase. How would you approach the sector? You have an IPO that's due. You have a core company, which is Bharti Airtel. I think you'll have some exposure out there. And Vodafone Idea, not the stock for the faint-hearted, but some believe that it has a good case to survive from here on. Capital could flow to them. And if that tariff increase comes about, that'll be music to the ears of shareholders. How would you approach the space? Or maybe you go for, Infotel, Industars.
Right. So, Nigel, first, we have Bharti as yet. It's a large weight for us. And of course, Reliance, we have, again, a large weight, which you indirectly participate through Jio. So start with Bharti. I think it's quite reasonably valued. A price increase is one difficult answer, which even the managements now try to almost not guess or second guess. And I think Bharti is working towards, if you see the recent annual report, the downstream businesses they are planning to build, I think they're underappreciated. The cloud, the NBFC also, they clearly have a right to win. For the postpaid segment, they can do the digital lending piece because they know exactly the behavior of them. So I really believe they have a right to win there. The data center, these are the three big opportunities. And then of course the value addition on postpaid in the mobile segment. So I think the business will look far different in 2-3 years, where the downstream businesses will have significant value creation. And we really believe this could be a good compounder over 3 years, best in class on all the aspects, take revenue, market shares, margin, frugality, capital cost, return ratios, payout. So all of them, we believe it's a good core holding, which we'll continue to own. On the rest, of course, Jio IPO will help our Jio based on the value, reliance on the valuations. It's a good thing, for sure. Most of the analysts are now attributing the Jio valuations in the RIL SOTP. There could be a marginal leg up and then there could be a holding company discount. So I think from a Reliance perspective, I don't think it'll matter much. It'll be more the fundamentals, which we again are very positive on the long-term fundamentals of Reliance. So that's very on the Indus. For now, we are avoiding because we think growth is missing there, and the new businesses in Africa and even the renewable integration. I think we're going to take some time. It's good dividend yield, but we rather want to participate through Bharti.
Yeah. I didn't hear any asset management companies in the list that you highlighted, at least in the large cap space. SBI Mutual Fund's IPO opens today, valued at about 1.18 lakh crores. So still at a discount to say an ICICI Pru AMC. Do you think they've left value on the table in the AMC space? Which stock would you back? Or is SBI Mutual Fund a stock to own in one's portfolio, given the franchise?
I think SBI Mutual Fund is reasonably valued. Certainly, they have kept money on the table at 24 times, broadly on 28. It is at a discount to the large peers. And I really believe that there could be good listing gains, maybe 10-15% surely. So we really believe, certainly the listing should be broadly around 650, 670 is what our assessment is. It's a very good IPO. They've done a phenomenal work. It's an amazing franchise, not only built on SBI, but even, SBI is just 23% of the business. They've built this business, and this is a business of scale. We clearly believe that's a 10-year, runway for growth. And it's really reasonable valued at the IPO price.
Right. Sanjay, in the past, you have liked a lot of the EMS plays and you've made serious monies there as well. Thereafter, you, I guess, took some money off given the valuations, you weren't very comfortable. But now after some time correction, perhaps in a lot of cases price correction as well, it's back in focus. We've heard from, Dixon, the final approval for the joint venture with Vivo has come by from the government. You have, on the one hand, value unlocking expected in Amber. You've in the past liked SGS Sirma as well. So where are you on that? What are your thoughts?
Yeah. So Mangalam, in hindsight, we bought Sirma twice. And both the time, I think we should have held on. So certainly in hindsight, we've sold it early because we found the valuation expensive. But, one learning is that when the growth is really intact, the overvaluation can continue for a while. And we need to learn from it. In terms of Dixon, again, it's very actively on our radar. They have not delivered recent times. Even this year could be a lower growth. Last year itself was disappointing, but they have a phenomenal management and amazing runway for growth. The opportunity is pretty large. They will also move from only predominantly mobile segment to non-mobile. Vivo will contribute. So when we look at this company on 28, 29, 30, it's certainly at a very good growth rate. It's just that, again, valuation is discomforting. At a price, we'll certainly be investors in Dixon.
Sanjay, maybe not a stock that you own in your portfolio, but any thoughts on Just Dial, up 35% in 2 days?
No, Rima, we're not on our active radar. It's just a lot of value. I think the cash I just read was just before the rise cash was more than the market cap.
Yes.
And there's a leadership change, but not an expert on the stock.
Right. So what are you actively, investigating right now from an investment opportunity perspective? You've given us what you own. You've given us what you don't like, but is on your radar. There's the EMS space, a couple of those players out there. But apart from that, where else are you actively pursuing opportunities?
Well, there are several opportunities. I think, we're agnostic. We have a large cap bias. The strategy has helped us. In fact, our NAV is, from Jan to June, we've really the entire fall of 7% we could mitigate. And our NAV was marginally higher than our NAV at Jan starting, So that has helped us. But on bottom-up basis, there are several opportunities. In renewable space, we met few companies. In the Digitech space, we have been evaluating few companies. Car trade earlier, we already own it, at work for us. So in mid and small cap, we are very, very clearly bottom up, trying to look for ideas, but only at the price value gap that we see. Otherwise, we are more happy with large cap. That's a strategy. It's worked for us.
Got it. Okay, all right. Sanjay, always a pleasure having you on the show. Thanks a lot for joining in and giving us your take. Have a good remainder of the day, and we catch up soon as well.
Thank you. Have a nice day.
All right, let's focus then on one of India's largest renewable energy deals. Grasim's arm, Aditya Birla Renewables, will acquire Shell-backed Spring Energy for around 17,200 crore rupees. Following the transaction, Aditya Birla Renewables' portfolio moves up from around 4.4 gigawatt to around 9.4 gigawatt. To discuss this, what it means for the company, what it means for the industry as well, we're joined by Mr. Piyush Pandey, the Senior Vice President, Centrum India. We also have Shrishti Ahuja, Partner Investment Banking at EY. Good morning, lady, as well as gentlemen. Thanks a lot for joining in. Well, Piyush, since it's market focus first, I want to come across to you. What do you make of this transaction? They're picking up close to 5 gigawatt for around 17,000 crores or thereabouts. The asset is yet to ramp up at full capacity, but a couple of details first. For this sort of an asset, what kind of margin should we assume? 75 to 80%?
Roughly for in the renewable space, EBITDA margin is roughly close to around 85 to 87%. But most of the cost items comes below EBITDA, like say depreciation and finance cost. So I would say getting this 5 gigawatt at a price of around 7,000 crores, roughly it comes to around 3.5 crore per megawatt, which is reasonable. So I would say, given the fast pace growth in this industry, players do want to use acquisitions to scale up faster.
Correct. But there'll be some more money that they'll have to put on the table, right, to ramp it up, this 5 gigawatt or thereabouts. How much are you assuming? As you said, back of the envelope calculation suggests it's around 3.2 crores per megawatt, which is pretty good. But there will be some capex. How much are you factoring in?
See, out of this 5 gigawatt, roughly 3.3 is operational and 1.7 is close to under construction. My sense is that they would require additional capex in the range of, say, roughly in the case of around 4 to 5,000 crores to ramp up the under construction capacity.
Okay, so then it would work to close to around 4.1, 4.2 crores per megawatt, which is still pretty okay, right?
Yes.
Which is the reference point, past transaction that we've had, or if you have to put up a greenfield, then how much does it come to?
See, for pure solar project, it is around roughly 3.5 crore per megawatt or 3.4 crores. And if you do a solar with battery, then it comes to around 4.5 crore per megawatt. So I would say those are the benchmarks and current times, yeah.
Okay, all right, got that then. Let's get in Shrishti Ahuja as well on the show. Hi Shrishti, good morning. Thanks a lot for joining in on the show. It's a landmark transaction coming in from the Aditya Birla Group. Aggression coming back in there as well. In various portfolios, they've gone ahead and showed their might. What do you make of this particular transaction, the big foray into the renewable energy space and effectively doubling the capacity, in one single transaction?
Yes. So, see, actually what we're seeing is that a lot of Indian conglomerates are going long on Indian renewable energy as a sector. And until today, the sector was mostly dominated by large global financial investors and international utilities. But given the volume that the sector offers, like the sector needs about $25 billion of greenfield capex per annum, the Indian players are now seeing that the sector is mature, yet it offers significant investment opportunities. So this is a trend that we are seeing across the board, where large Indian players are becoming very active.
Got it. Yeah, indeed. Piyush, coming back to you, out of this 5 gigawatt, you just gave us some broad numbers in terms of solar, plus if they're putting a battery storage system as well. You have any further clarity about this 5 gigawatt? How much of it is solar? How much of it is other renewable energy? I don't have that clarity, so I'm asking you.
I would say in terms of breakup, we don't have the details, but my sense is that bulk of the capacity is in solar. Mostly it should be around, say, roughly 90% of the capacity should be in solar. And remaining 10% can be like, say, wind or other. And if it is complemented with battery, then of course the value of the asset can be significantly increased.
Okay, all right. And what about valuation-wise, Piyush? All we have is the revenue number, which scales between 1,100 crores to around 1,250 crores or thereabouts. If I look at it and if I give it that 80-85% EBITDA margins, then on a trailing basis, it doesn't look very, very cheap on an EV upon EBITDA basis. But on a forward basis, how do you see this number? If you have to compare, what EV upon EBITDA is it done at? And who are the peers that trade in the market? What EV upon EBITDA multiple do they trade at?
See, generally, in my coverage, so I cover like NTPC Green and Acme Solar. So NTPC Green roughly trades at around, say, 14-15 times EV/EBITDA on FY28. Acme Solar slightly cheaper at roughly around EV/EBITDA of 11 times, 12 times on FY28. So broadly, I would say, see, currently, we also have to look at, like, say, 100% capacity scales up. That can lead to significant growth in EBITDA going here. So anywhere between 12 to 14 times EV/EBITDA on FY28 can be sort of fair valuation estimate. Yeah.
Both on replacement costs and EV upon EBITDA, this transaction looks pretty favorable actually for the Aditya Birla Group. Would you say that?
Yes, sir. Both on the replacement cost as well as on the EV/EBITDA valuation. It looks reasonable, I would say.
Right. Shrishti, I just wanted to understand from a pure business perspective on renewable energy, where everyone's putting up so much capacities, etc. What's the kind of ROI that investors get on putting up renewable capacity? That's point number one. And secondly, from a user standpoint, how much is the price different from what we see in traditional sources?
Right. So see, I think in terms of the returns, there is a stark difference in the market for what a greenfield bid will offer versus, some of these M&A transactions. So any sponsor, when they're going out and bidding for greenfield projects, they would typically solve for, let's say, mid to late teens rupee levered IRRs. And then the underlying assumption is that once the projects mature, the cost of debt comes down, there is a possibility to monetize these assets and get a yield contraction. And this is what we've seen a lot of global developers and funds, for example, doing. When I come to the returns for operational projects, these are typically early double-digit rupee returns, but these vary about 100 to 200 bips, depending on, for example, what is the configuration of the project, solar being the lowest and complex FDRE projects being the highest. And it also varies a little bit depending on the off-taker. So central off-takers would generally merit the lowest cost of capital. And on your second part of the question of, consumers, how do the consumers see this? See, the good thing is that renewables still, although in terms of installed capacity, it has almost become 50% of India's capacity. But in terms of actual energy contribution, it's much lower because plants operate at lower CUF. So the consumers, in a way, are indifferent because it's a blended cost of power. And today, anyway, renewable is at grid parity. So it does not affect the consumers, but definitely the entire power mix becomes greener.
Okay, all right. Thanks a lot, Shrishti, as well as Piyush for joining in and giving us clarity with regard to how do you all view this particular transaction. Net, it appears that the Aditya Birla Group has got this asset at a fairly good valuation. And it's showing, that Indian companies as well, they continued focus on the renewable energy piece. Wishing you all both a good day ahead. Thanks for joining in. Well, time to slip into a short break. On the other side, we have Amit Murarka of Axis Capital who will be joining to discuss what do we expect from the metal sector in Q1. Stay tuned.
Welcome back. Well, after the initial bout of recovery from the lows, the market sold off once again. The Nifty is below the 24,100 mark, sitting with a cut of almost 130 points. And this time around is the Nifty Bank, which has taken it, lower. It's down about 1% and no support coming in from the IT index as well. So across the board, there is some selling. And the advanced decline comes up for you once again. It's widened. 1,800 stocks in the red for about 900, which are in the green. So there is a bout of selling after the recovery that we saw. So let's see how that goes. The rupee has weakened past 96.1. But this is also the time where we get you our special quarter se quarter tak segment, where we bring you earnings expectations from each sector. And today, Nigel has walked across to the wall to tell us how the first quarter will be for the metal sector. Nigel.
All right. Thanks a lot for that, Mangalam. Well, quarter one FY27 earnings season is set to begin for the metal sector, and expectations point to more or less a mixed quarter. While for ferrous companies, well, they're likely to benefit from stronger steel prices, non-ferrous players could see support coming in from elevated base metal prices. Let's start off with the steel companies first. The average steel realizations are expected to increase by around 4,000 rupees per ton on a quarter-to-quarter basis. That's driven by price hikes that were implemented over the last 2 quarters. However, higher realizations are likely to partly offset by rising input costs, like coking coal prices, which remained elevated, and iron ore cost as well did move up higher in the past quarter. On the volume front, well, steel companies are expected to report around an 8% year-on-year growth, although volumes may decline by close to around 14% on a sequential basis, but that's because of the seasonality factor that did play out. The capacity ramp-ups at Jindal Steel as well as at JSW Steel, that's what's expected to support the overall shipment growth. Overall, the sector margins are expected to improve by roughly around 1,500 rupees per ton in quarter one FY27. That's supported by elevated flat steel prices. That said, the benefit is likely to be moderated because of the higher coking coal cost as well as seasonal weakness in rebar prices in particular. Though HRC prices have remained pretty stable, the rebar prices have come in for some profit taking, or in fact, there's come in for some pressure as well. And now we're getting to a seasonally weak period as well. So rebar prices could remain under the weather. For non-ferrous companies now, expectations remain broadly positive because commodity prices have been strong, and that's what's going to support earnings for the past quarter. On a sequential basis, you have aluminium prices are up by 12%, zinc prices are up by close to around 7%. However, silver prices have pulled back in the past quarter. So let's have a check now on the company-wise EBITDA expectations. Hindalco, that's expected to report the strongest EBITDA growth at around 14%. This is as per Jefferies estimates on a sequential basis. Followed by JSW Steel, that's expected to deliver a growth of close to 11% on the EBITDA. On the other hand, Hindustan Zinc is expected to see a marginal decline of around 1%. Coal India could report a fall of close to around 4%. And Tata Steel is expected to report a decline of close to around 7% in EBITDA, followed by Sham Metallics at around 11%, and Jindal Stainless, which may see the sharpest decline on a sequential basis of around 13%. Overall, the quarter is expected to reflect the improving steel realizations and resilient base metal prices, although higher input costs and company-specific factors are likely to keep the performance a little bit mixed across the metals pack. Well, to help us out with how the last quarter is panned out and what are the top picks from here on, we're joined by Amit Murarka, the Executive Director at Axis Capital. Hi, Amit. Good to see you. When interesting times, right, for the metals pack. Last quarter, things look good, where base metals prices could go no wrong. And now, towards the end of the quarter, well, it seems a bit of a wake-up call. First, give us a couple of expectations. Which stock could be the potential outperformer in terms of earnings reaction for quarter one, FY27?
Yeah, good morning, Nigel. We are expecting a strong performance from the non-ferrous space, which benefited from higher aluminium pricing in the quarter. Additionally, the physical markets are also tight. So there was a premium on the delivery of the metal to the local markets of about $300, $350 a ton versus usual premium of $800. So it's been a very strong quarter for generally the aluminium names. The steel names are also doing well, but there's a bit of a moderation due to cost inflation coming in from coking coal and the broader inflation from West Asia crisis. So to name the companies, essentially, Hindalco and Nalco both are expected to see a 13 to 14% sequential EBITDA growth in our coverage. The steel companies will have more or less a flattish quarter in that sense because of the volume declines that we have seen due to the seasonality.
Okay, all right. Amit, how would you approach the ferrous pack? Some of these stocks, they've either consolidated the pullback. Stocks like Tata Steel, SAIL, they have seen a good pullback from the recent top. Is it providing a good entry opportunity? Now, this monsoon season will not have much good news. But do you think that steel is providing a better entry opportunity, or would you stick to the non-ferrous names?
No, we clearly prefer the ferrous names in the current situation. This is obviously premised on the assumption that the West Asia conflict doesn't get dragged on for too long, because that's essentially an important driver of aluminium pricing and the stocks which we have seen in the last 6 months. So our core thesis is that the conflict doesn't get too prolonged, and aluminium market, we believe, will be in a surplus in CY27. We see a 0.5 million ton surplus, assuming a ramp up of Middle Eastern supplies. So we therefore see downsides to actually the metal prices, aluminium prices, and some of the aluminium stocks as well. Whereas in ferrous, I think the pricing, particularly for rebar, will have a tailwind from the seasonality factor, as in once we start getting out of the monsoon, we expect better construction demand and recovery in prices, and expect some upside from names like JSPL and JSW Steel from current levels.
All right, quite interesting then. So you're in the camp that says that ferrous over non-ferrous. Since you're expecting the aluminium global sector itself to go into a surplus in 2027, what pricing are you working with? Because people were dancing away at around $3,800 per ton. It's come down to around $3,000 per ton, and now overnight there is some bit of a pop. I think the Chinese aluminium company has gone ahead and increased their guidance as well. That's what's having some positive sentiment rub off. But pricing, what are you factoring in for this year and next?
So this year we are at $3,150 a ton, and next year we are at $2,800.
Okay, all right, $28, got that. Also, let's focus on some of those miners then. Coal India is a stock that has been in focus. The government came in there. They did the smart thing, right? They went ahead and they did the OFS. There was plenty of demand though. Currently, the stock price is below the allocated price, in that OFS. I think it's the allocated price was around 447 or thereabouts. What's your view on Coal India? Do you believe risk reward is still favorable? And if you want to come in with a word on NMDC?
So we see risk reward as favorable in Coal India. I think people basically are playing the stock also as a proxy to energy pricing, as we see. So whereas we believe that the Indonesian coal pricing, the export pricing will stay elevated in the longer term, because the production quotas over there are getting cut, exports are going down consistently. And the pricing has already jumped by almost 40% or so in the last 1 year. That's going to support the e-auction pricing and volume for Coal India, which we've already seen in Q1, wherein e-auction volumes have jumped almost 45% YOI for Coal India, and premiums have also been better. So we see actually there being good traction in the name from here on. And additionally, there's some value unlocking expectations as well from some of the subsidiary IPOs, which could happen in the second half of the fiscal.
Got it. Okay, all right. So Coal India, but you'll have a buy rating on that stock, I think.
Yeah, we have an ad rating.
Okay. The point you made on rebar prices, the gap between rebar prices and HRC, that's between longs as well as flats, that's widened quite a bit, because rebar prices have corrected while HRC prices have been more or less stable and they've fallen less. Do you think that has got a little bit excessive right now, and now you expect actually that catch up to take place?
Exactly. So I would expect rebar pricing, actually, to kind of put a background to it. Rebar pricing has a seasonality, strong seasonality rather, to monsoon. For the last 3 years particularly, we have seen prices drop by almost like a 10 to 15% range and start recovery once the monsoon gets over. So we have already seen a big correction of almost 15% actually happen in the last 2 months. And I think probably the pricing will stay a bit weak for another month and a half, and then will start to recover. And the gap in that sense should shrink, though we don't expect rebar prices to reach parity to HRC. Yeah. I think they will stay at a discount simply because HRC has a support of safeguard duty of 11.5%, which is not available in rebar.
Got it. Since I think JSPL is a stock that you're quite optimistic on, and a couple of factors are playing out. One is the volume growth. Then you'll have pricing, as you're saying, could bottom out. Obviously, it doesn't catch up to HRC, but that gap between the two at least narrows out. And they have a higher amount of long exposure, though they're adding flats as well. How concerned are you about this rejig at the top? The CEO comes in October 2025, moves out already. I mean, how do you approach a stock? You want some stability at the top, right?
Honestly, it has been one of the long-standing issues in the company. the management has been in a bit of a flux for quite some time, not just the last 1 year. And that obviously is the reason why there is so much volatility in the name as well. But ultimately, I think we have seen that investors tend to reward growth and earnings. So to that extent, I would say that the recent correction kind of is giving a good entry point in the name.
NJSPL. Okay, all right. So in Jindal Steel, as it's been renamed. Final question. The Vedanta Group has been in focus because of, the various verticals that have now got listed. I wanted to ask you about the Vedanta Iron and Steel unit because, that's a smaller part of the business. But in terms of, I know you don't officially cover it, but in terms of a replacement cost or any kind of math you've done with regard to that entity, because suddenly the street is quite excited about that unit as well. Probably because it's a smaller vertical, price-wise as well, it's less than 50 rupees. So there's a lot of interest. Any view on that name?
Honestly, won't be able to offer a comment on it as we don't cover the name. So we'll stick to covered names in this discussion.
Okay, all right, Amit, we appreciate you joining in. Thanks a lot for giving us your view on a lot of those stocks. So that's the call coming in from Amit. Ferrous over non-ferrous, that's the name that he's looking at. And in terms of ideas, one of the top picks that they have is Jindal Steel. The recent, rejig at the top is making investors a little bit nervous, but he believes it's a good entry opportunity. And from the mining pack, Coal India is another stock that they like. Rima, back to you.
Thank you very much for that. And I think for the aluminium players today, Chalco, which is the Chinese-owned aluminium company, has released, I think, the numbers and
that's
some
what
profit.
we discussed.
Yeah, that's also pushing up stock prices like Nalco and Hindalco today. But let's just get in Sudarshan now for more on Biocon and the block deal and the way the stock has reacted. Sudarshan.
Stock has reacted positively, currently up more than 5%. Just if you talk about the news, more than 9 crore shares have changed hands. And the entire block deals happened in the block deal window. And that's the reason you are seeing a sharp surge in the stock price. And the block deal value total value is more than rupees 3,600 crore. The biggest positive part is that it has happened at rupees 400 per share. And that's at a 5% premium to the floor price that company had set. And the floor price was rupees 378.50. Now, the another positive part is overhang of Mylan holding the stake in Biocon is gone. Mylan has sold its entire 5.64% stake. So how did Mylan hold the stake in Biocon? So remember, Biocon and Mylan have had the long-standing partnership that it's been going on since 2005 or 2006. And Mylan held the stake in Biocon Biologics. Now, early in 2026, as part of the agreement, Biocon had acquired over 6% stake from Mylan that they held in Biocon Biologics, and instead of that, they have got more than 6% stake in Biocon. Now, some stake they had sold earlier, but remaining 5.64% stake they have sold today. Just at the end, remember, do you know at what price Mylan had got the share in Biocon via preferential allotment? It was at rupees 405.70 per share. So if the question is, did Mylan make any money? The answer is no.
Okay, thank you for that interesting fact there. Before now, the stock is reacting to the fact that the stake sale overhang is now out of the way. A quick word on HCL Tech. Stock is still under pressure, seeing some profit booking. Remember, it had rallied 14% till yesterday in July itself. And on account of it, the stock was trading at a premium to peers like an Infosys TCS. So HCL Tech's valuation PE FY28 was about 16 times, while a TCS was closer to 14.5 times, and Infosys a similar number. So there is that, that reverse trade taking place. Maybe some money is being pulled out of HCL Tech and it's going into other names like a TCS. But purely on, numbers, it's a decent set of numbers. The advanced AI revenues have gone up 62% on a year-on-year basis, though it's still 4.7% of the overall revenues. Net new deal wins are strong at a record level in Q1 at $2.4 billion. The company is saying the pipeline is also strong. Remember, in July itself, they had won a $1.1 billion deal. The company holds on to its FY27 guidance. It's making a bet on data centers with an initial investment of 3,500 crore rupees. So all that is great. All that is fine. But I think the only niggle in the, there's nothing in the numbers per se why the stock is correcting. It's just that perhaps it had run up too much in the near term. So there is that mean reversion taking place versus peers. But Mangalam Concor?
Well, Container Corp, it's buzzing in today's trading session. The company actually reported its first quarter business update yesterday towards, the dying minutes of trade at around 320 thereabouts. The numbers, 8.89% is the volume growth, the total volume growth that the company has reported. Exim volume growth at 9.8%, domestic volume growth at 6.17%. How does that fare against their guidance at the start of this year? At the start of the year, they had guided for 9.5% total volume growth. So this time around, the total volume growth has been 8.9%. Exim volume growth was 8%, and there it has been a bit of a beat, 9.8% versus 8%. And domestic volume growth target was 15%. The company has reported around 6% in terms of domestic volume growth. So the street is excited by the fact that Exim volume growth has actually beat expectations and the company's own guidance. But here's a couple of points to put it into perspective. This is the first time the company has given a less than double-digit volume guidance growth. In fact, over the last few years, if you look at all the previous leadership of Container Corp, they've given volume growth guidance between 15 and 20% itself. So they curtailed their guidance lower, and this is a mild beat on those lower guided numbers. And remember, the stock over the last few years as well, from closer to 900 had moved closer to 400, and at lower levels, from the lower levels on beating muted expectations, the stock has seen a bit of a bounce. So we'll monitor how Container Corp plays along in today's trading session and beyond this as well. For now, it's rejoicing the fact that at least the lowered guidance has been met, if not beaten.
Okay, thank you very much for that. Still down about 130 points in the Nifty. Chandan Taparia, Motilal Oswal Financial Services is now joining in on the show. Chandan, how would you approach this gap down? Any trade that you've taken on the Nifty and Nifty Bank?
Yeah, good morning, Rima. Thanks for having me. So the Nifty got stuck in a range. We have noticed in last 15-20 days that multiple supports are intact at 23,800 marks, but at the same time, two key hurdles are placed near 24,250 and 24,450. So those hurdles are not allowing market to move on higher side due to the geopolitical concerns. But at the same time, we have noticed the declines are being bought. So we have to be very selective until the market doesn't give a decisive breakout of this range. It would be tough to get the next leg of rally. So as of now, the suggestion is you have to be in a broader trading range. If market comes near 24,000, utilize the support near 23,800, play the bounce towards 24,250. So that's all what we can do in the index as of now. If I look at the data setup, that is giving the mixed cues. FI's long short ratio is near 10%, put call ratio and the VIX are giving the mixed setup sentiment in the market. Now, if I look at the Bank Nifty index, that has been consolidating in a range from last almost 15 days. Multiple supports are visible near 57,000, but hurdles are at 58,000 to 58,250. So mixed setup cues in both the indices, but as immediate trend setup is positive, so one can go with buy on decline near the key support on declines in the market.
Stocks, Chandan, that you would bet on?
Yeah, so to buy one sell side, first it is buy on Divis Lab. Selective pharma counter are doing well, and Divis Lab has given a consolidation breakout on the daily and the weekly chart after 40 days long consolidation. It is holding well above its rising trend line with the respect of key moving averages. In fact, a positive price pattern of the rounding formation also indicate the bullish stance, or the counter can play as a defensive nature as well. So with support of 68.50, looking for an upside move towards 72.70 in the Divis Lab. Second trading idea, that is buy on Adani Power. Somehow Adani group of companies has been consolidating in a range, and Adani Power has taken support at 50 demo after the corrective or consolidative move of last 8-10 weeks. It took support near 215 and higher base is being created. So looking for some bullish stance. So with support of 216, look for a recovery towards 233. One more trade that is on the sell side, that is sell on PI industry. One of the weak counter has been making lower top, lower bottom on the daily and the weekly. So one can sell with hurdle at 25.80. Counter can decline towards 24.50, 24.25 marks.
Thank you very much for that. Just one word on the Korean markets before we get into the break. Kospi is sliding now once again, nearly 3.5% to 4% lower now. When we last checked at about 8 o'clock, Kospi was down 2%. But the sell-off in the Korean technology semiconductor names is accelerating. So 3.7% down now on the cost. Okay, sorry, on my screen it showed about 3.5%, but maybe it's still down 1.5%. So we'll go with that. Get into a break. We'll come back with more on commodities. Stay tuned.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Welcome back. Sterlite Tech, a stock which had a one-way meteoric rise from the beginning of the year, has been correcting for the last 3 or 4 trading sessions. So Sterlite Tech, another 4-5% down. This week itself, stock is lost close to about, I think every day it's been going down 4-5% yesterday and today. The other one is Lodha Developers, a stock which rallied 20% from the beginning of July as interest revived in the real estate space, is also correcting a tad bit. So Lodha Developers is down nearly 3.5%. But Manisha is now joining in, and she's going to give us data on India's sowing. Manisha, how's it looking considering how erratic monsoon has been?
Oh, well, absolutely. It's not looking good at all. And, you know, it's not just the crude oil prices that gained 10% overnight, which is a worry. It is going to be about the El Nino that India is facing and the weaker monsoon as well. That does seem like a double whammy for the Indian markets right now. So when you look at the overall monsoon itself, starting from June 1 to 13th of July, we're looking at 19% of a deficient monsoon, even as July has been quite great. June, remember, was 40% deficient. So we haven't been able to get up to those numbers. And then, of course, after that 1st to 10th of July rainfall, after that, it really has slowed down yet again. So while overall India is 19% of a deficiency, East and Northeast continues to be very deficient at 36%. South Peninsula hasn't been able to pick up as well, 22% of a deficiency there. West is 12%, Central India 8% of deficiency at this point in time. But when you look at the overall map, the large deficiency may have come off, but the deficiencies across the country still stand at a 40% tall. So we are looking at many states which have seen more than 20 to 30% of deficient rainfall coming in there. This is what we've done in the last many years when it comes to the Indian monsoon. So last couple of years actually was above normal at 108%. And then we've seen 94% of a normal monsoon, normal again, and then normal again. So after 5 years, India is looking at a back-to-back very good monsoon. India is perhaps preparing itself for a deficient monsoon. The all-time low in sense of overall monsoon deficiency has been to the tune of 22%. And India is not too far away from that, depending on, of course, on how August and September pan out. It's something that we'll have to see in that sense of number there. The lower monsoon has led to delayed sowing. And if you look at the latest data that came in yesterday evening, we are standing at 16% lower sowing as compared to last year. And this is what we've done in various commodities as well. And there are concerns, by the way, building up in pulses, oil seeds and cereals as well. Pulse's sowing is 23% down. This is perhaps the lowest number that we're looking at in a decade right now. And within Pulses as well, it is about Tuar, it's about Urad, Moong, where you have seen 10 to 30% of a decline in sales of sowing. The next one on your screen is core cereals, where again, 23% of a decline coming in for this one. So whether it is about Bajra, Jawar, maize, you're looking at 20 to 25% of a decline in sense of sowing. Pretty much similar scenario when you're looking at oilseeds, yet another very important crop in Kharif. And here as well, 21% of a decline in sense of sowing. You're looking at 34% of a decline in groundnut, 46% in sesame, and 16% in soybean as well. So weaker numbers continuing. The important point to watch out for is that while the sowing has been delayed, the window is open for next 10 days, and that's about it. So if the sowing does not pick up in next 10 days until the end of July, then we are looking at serious concerns in sense of sowing numbers as well. The only positives that I see in this one is rice decline, but just about 9%. And then you have cotton, which also has seen a 15% of a decline coming in. Cane is 1.2% higher as compared to last year. So barring cane and a couple of other crops, almost every crop number sowing shows a decline as compared to previous year. As I said, it's a bit of a concern. If it's end of July and these numbers don't catch up, then we are looking at lower sowing and lower crop numbers.
Thank you very much for that, Manisha. Some more stocks. Bajaj Consumer is taking a leg down. The stock was down 2% yesterday despite good numbers. Today, another 11% lower. Remember, this is a stock which has gained 150% in the last 1 year. And in Q2, the management in the conference call did indicate that there could be margin pressure on account of raw material inflation. And MTAR Tech is another one of those high flyers, 165% gain year to date. And the stock today is correcting. Overall, benchmark indices are down nearly 0.5%. We will get into break. On the other side, Lata will speak to the management of Bank of Maharashtra on the back of the Q1 numbers. Stay tuned.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Impressive set of numbers. Bank of Maharashtra posted an impressive set of numbers, 27% rise in profit, 27% rise in advances, and a 13% rise in deposits. Net interest margins, however, fell from 3.91 in the March quarter to 3.79 in the June quarter, a cut of about 12 basis points, and that probably led the stock to see some kind of selling this week, though of course even the macro factors have been very difficult this week. Joining me to discuss the result is Nidhu Saxena, Managing Director and CEO of Bank of Maharashtra. Mr. Saxena, thank you very much as always for dropping into our studios. Well, let me start first not with your results, but where you were yesterday. You know, our reporter Sapna was reporting on your meeting with the finance minister. What is the overall sense that we may get in terms of FCNR, overseas OFCBs and ECBs? Was the mood very positive?
So,
The agenda for the meeting was to discuss on the preparedness and the steps individually banks are taking, just to take a stock of those on all the three elements, all the three opportunities. So FCBs, ECBs, OFCBs, and of course FCNRB. FCNRB is going to close, the window will close on 30th September, while the other two continues till December 2026. In Bank of Maharashtra, we also are looking at this opportunity in terms of, if you look at our credit growth, which is 27%. Of course, there is a 3% contribution from IBU. Minus that, it is 24%. So it's a decent high double-digit credit growth that we are able to register. We feel that OFCB's fundraising that we will be doing are going to make a lot of commercial sense also to the bank, and we will continue to see that good contribution to the bottom lines, margins, if we are going to go through this route. Okay. And what has it been a big strategic move we did when September 2025, our GIFT IBU was operational in a record time of 5 months of RBI approval. That gives us a lot of opportunities to do ECB transactions and also do OFCBs easily through that route. We have already done 9 ECB transactions so far, 430 million odd. And there are a lot of things in pipeline, and I think...
What is the likely OFCB you will raise? And I mean, is there any target number you have in mind?
So yes, we are looking at a figure of 1 billion actually for the bank. And this is going to be a supplementing me in raising resources for supporting this credit growth. So while I have other options to look at, but when I evaluate this option, this also makes a lot of sense. And when there are RBI swap benefit which is available, when the need is there also for the country, why not we will participate.
Fair point, but let me come to the advances part itself. 27 and 13, 27 advances and 13% growth in deposits is the widest difference if you look at any bank. And that is seen in your credit deposit ratio. You were at a very healthy 79. Now you have come to, I think, 88.
86.
So that is, that cushion is going down. Can you continue to have such a big difference? Do you not have to narrow the difference?
Right. So, very good question. I think I would like to showcase what is happening behind this. And it is a conscious strategy on our part to see what element of resources we are raising to support this credit growth. If you see 27%, yes, 3% is coming from IBU, which is supported by borrowing. So, domestic advances are growing at 24%.
Yes.
Probably in the Q1, we haven't raised a single CD.
Okay.
And I could be seeing myself, because the results so far and the average in the PSB and average in the private banks, the CD contribution is substantial. Okay. PSB average I was seeing, if they have grown their book deposits at 11%, you minus the CD, it is 10%.
Yes.
In case of private banks, the book has grown, deposits have grown at 14%, you minus the CD, it is actually 11%.
Yes.
So against a 10-11%, mine 13%, which is a core deposit growth, is something which is good, I would say, and very consciously done. What we feel, we are not averse to CDs. We can keep looking at those options as and when. But CDs, of course, come with some of their own challenges. It's a short-term measure. A maximum tenor is 1 year. You also have a runoff factor of 40% when you do your LCR calculations. So actually, you are supporting your credit growth through borrowings. While the situation when we have not raised a single CD in the Q1, we have supported all the credit growth through our deposits. And yes, there is another element which is supporting, which is refinance that we have been taking. And that also almost 19,000 crores of refinance is availed. Again, that comes with the advantage when I'm having a blended cost of almost 6.25 to 6.5. There is no CRR and SLR loading.
Yeah.
It makes a lot of sense to continue with this strategy.
But you don't worry. I mean, that is part of the reasons why deposits are still low cost compared to the other avenues. And there is a historical RBI discomfort with a very high CD ratio. They have not mentioned it in the last 2 years, but as you go towards 90, the discomfort will come. will that impact on margins? If you are pushed to raise deposits, as it is from, you have lost 12 basis points in terms of margins, can there be more pressure?
So I'll tell you the YOY dip in margins NIM, which is 10 bips and 12 bips Q on Q. We had done a lot of MCLR cuts in the last FY. And the MCLR cuts, the reset has happened in the entire MCLR book by March last Q4. So we have seen in Q1 a full impact of the MCLR cut. No more pressure, that is one. Second, yes, we have also seen with the widening of rate that we offer on a TD versus a SB rate. So there is some shift in movement from savings accounts to term deposits. My saving CASA has grown at 9%, while TD has grown at 16%. So these two elements are playing. But if you see, we are 3.85 NIM, which is a good, high, decent number. And if I recall the guidance that we have shared, to maintain our NIM at 3.75. So we are still 10 bips more than that, is what I sense. Okay. Tomorrow, we feel that, of course, there is no talk of any further rate cuts now. If there is a rate hike, I'm sorry, I correct myself, no rate hikes. But if there is a rate cut, I have almost now 50%, 53% book which is repo linked. Moment that happens, I will start seeing that there is a
cost of the cost funds go down. Yeah. But anyway, at the moment, given that inflation is on the rise, there is no rate cut on the horizon.
And I would like to answer, sorry ma'am, about the CD also. CD ratio, which is from 80 has gone to 86. But again, if you minus the refinance, it is 70, I mean, today it is 81%.
Okay. It's not as big as 86.
It is what looks like 86 is actually 81% only because of the refinance, and which is a conscious strategy because we are having our sight on the margins at all times.
Okay. I wanted to come to your tax. That has been a very big asset for you, the lower tax ratio because of past bad loans. Does the advantage run for this year also? Will you be paying lesser tax rate than a comparable bank?
The accumulated losses benefit got exhausted in the last FY. Okay. FY 25-26 in the half year, we completely exhausted. I paid almost 900 crores as advance tax for the last FY. For the Q1 also, we have paid an advance tax of 300 crores. Okay. So now we are into the new regime. The applicable rate is 25%. But looking at the eligible deductions that we are allowed to take when we are raising provisions for rural advances, non-rural advances. So as per guidelines, so my effective rate is around 17%. Okay. And I have also shared this in past with the tax liability coming up. I don't foresee even in percentage terms or in absolute terms that you will see any dip in my OP or NP numbers.
Okay. Oh, well, there's one question which a viewer asked me to ask you. Are you going to raise capital? Because you have taken permission for 5,000 crores. He was worried because your CRAR is already 18%. Will you raise capital?
So, while you rightly observed, we are adequately capitalized with a CRAR of 18% is quite healthy. But if I look at my guidance is to maintain it at 17 and above 17. Now, with the fast credit growth that is happening in the system, and my ROE, if you look at, is 24.65. And if I decide to raise capital, looking at the market conditions, it can be a case where you can look at. So what ideally we do at the beginning of the FY, we do take the enablers. So today my board approval is there to raise equity of 500,000 crores and total is 7,500 crores. We have gone for a shareholder approval is also there. It's with now government. We have submitted our request. Once that enabler is there, at opportune time and using an opportune mode, we will decide on this element also.
Now, the most important question is this farm loan waiver and, how your agri loans will perform. At the moment, your slippages or NPAs or SMAs, it is not even worth talking about. It is so good, so low. But your agriculture sector loans have grown at 28.9%. And the percentage share of NPAs in agri loans is, I think, 7.5% or something. Right. Now, if you take that and you take an El Nino year and you take this farm loan waiver where even those who are not eligible for waiver, it kind of spoils the credit behavior. Should we worry about your agri loans?
So I would clarify that the agri growth that has come, almost 10,000 crores YOY basis, my agriculture book has increased. If you see the contribution that has come from the gold loans, it is 9,200 crores is gold loans. So which is all backed by security. So there is absolutely no concern about our agri going and going to give any problems. My gold loan, if you see, YOY has grown at 75% and major part is happening in the agri segment. That is one. Second, you asked about the farm loan waiver.
Yeah.
We have looked at the eligible accounts. 3,500 crores is the portfolio which is eligible as per the state scheme. I have 2,600 crores which are already slipped to NPA or TWO. So anything that is happening in the farm loan waiver and with a 91% of provision coverage ratio outside the TWO book, any recovery that is going to come from the government and even the farmers have
That will be fine.
So
my worry was only whether it spoils credit behavior.
Yes, yes.
El Nino pressure is there and this feeling that waiver mil jayega. Will that...
So I have already, my agri NPA is 7.93 and we have seen that because of the waiver announcements, there are some holding back of repayments to banks. Whatever has slipped is already come. Now it is the time to, I would say, see the benefits out of it. Moment the recovery is coming, I will see in my P&L statement, both I will see a TWO recovery. I will also see a PL positive benefit through write back of provisions.
Okay, so absolutely out of time. My producer is angry with me. I have to thank you for coming to our studio. Let's have a longer chat when results are not, sitting on our head.
Thank you, ma'am, for having me.
We have to wrap up on Bazaar on that note. After a break, Chartbusters.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Brent crude has climbed back above the $80 mark, now at $85 as US-Iran tensions heat up. President Donald Trump has announced a 20% toll on ships using the Strait of Hormuz, sparking fresh concerns over global oil supplies. The spike in prices drives action in crude-sensitive stocks. As you can see, ONGC mildly in the green. The users are in the red.
HCL Tech takes a knock. The IT major reports an earnings beat in Q1 FY27. The company records its best ever new bookings at around $2.4 billion. AI business grows by around 10%. The management retains FY27 guidance of around 1 to around 4% growth in constant currency revenue. Brokerages deliver a mixed verdict on the counter. The stock comes in for profit taking.
Viatris-owned Mylan exits Biocon. 9.2 crore shares worth 3,600 crores change hands in a block deal at an average of 400 rupees a piece. That's a 5% premium versus floor price of 378 rupees a share. The stock jumps 7% in early trade.
High flyers of today's session, Nuvoco Vistas delivers a steady Q1 results, sustained cost discipline and operational efficiencies back margins. The consolidated volumes grow by close to around 5%, while the realizations pop up by close to around 7% on a sequential basis. PDS inks a multi-year SaaS contract with a French headquartered supermarket company. The stock pops up more than 10%.
The centre fast-tracks IDBI Bank's divestment following high-level talks yesterday. DIPAM and DFS Secretary is part of the ministerial group. That's a CNBC TV 18 exclusive. IDBI Bank pops 3%.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as you can see to the top of our screens, the Nifty is down by close to around 100 points. But like we saw yesterday, relatively actually the Nifty is doing an outperformance. The Kospi, the last time I checked, was down close to around 1.5%. And the remainder of the Asian markets as well are seeing some selling. The problem is that the rupee has weakened yet again. It's holding at around the 96 odd mark. And the crude oil prices have spiked up, holding above that $85 per barrel mark. But the Kospi actually has wibbly-wobbled. Now it's recovered from the day's low. Though if you look at it in the last few trading sessions, it's corrected from around that 8,000 odd mark all the way to around 6,800. Mangalam, we wouldn't want those sort of moves here in the Indian markets. The Kospi, even after the pullback though, it's still up close to around 60% or thereabouts. And important to note that in the Kospi, the FIs have been sellers actually from the start of this year. It is more the domestic money and its leverage positions that have pushed up that market.
Let's see where that goes, Nigel. But the important part is the FI shouldn't continue or resume their selling in the Indian markets. Yesterday, we saw a little bit of that with the FI selling about 3,000 crores in the cash market. But so far, they've been fairly well behaved for the last 1 month or so. And as a result of which, we've seen the rupee stabilize as well. Now with Brent going back to 85 and the rupee moving towards the lows of today's trading session around 96.14, will be very, very crucial to track how these two matrices perform from here on as well. But from the broader markets, we are seeing a sharper sell-off. We have 2,000 stocks which are now in the red for about sub 900 which are in the green. So those lines are moving further apart from each other. And now as we speak, a bunch of stocks have come in for fresh bout of selling. HDFC AMC for one is moved to the low point of trade. ICICI Pru Life is the other one which has moved lower. A couple of these banking names are not doing too well, currently at the low point for Indian Bank as well. The Nifty Bank very close to its 200-day moving average. So long as it holds that, bulls will be fancying their chances. But let's welcome Manish Athiramani for a quick technical check on the market. Manish, you had last time given us a target of around 23,900 as a level for the Nifty, above which, if it continues to hold on, the trade to 24,600, 24,700 is still on. We are off those highs and now at 24,100. Do you still maintain your bullish stance, or do you believe that maybe we're in a no trade zone?
Good morning, Nigel and Mangalam. Thank you so much for having me on the show. Well, we are currently facing resistance around that 224 to 50 levels. We have reacted from those levels twice already, including a gap down this morning. 23,800 now continues to remain a strong support to keep our eyes on. Until that does not break, we would be looking at signals to go long on this market. On the upside, 24,600 is a plausible target. And if we break 23,800, then 23,500 is a possibility.
Got it. Okay. All right. Hi, Manish. It's been a while since we spoke. What about the Nifty Bank? I missed the level out there.
Nifty Bank, I'm working with 55,700 as a good support for the index. On the upside, we can scale up to 60,000. But the real level to look out for will be 55,700. Until then, certain banking names continue to look weak.
All right. Until then, certain banking names continue to look weak. A bunch of stocks actually doing well right now. Kalyan Jewellers is up around 4%. Just Dial 13%. A big 20% up move yesterday. Followed that up with 13%. Takes the last 2 days moves to about 35%. And now in the jewelry pack, we have TBZ as well, which is participating. That stock is another one which is up around 30% this month. So TBZ up around 12% for that counter. But we do have a bunch of your stocks that you've listed out for us. Manish, what would they be?
2 sell calls I'm working with. The first one is on Axis Bank for a target of 1270, stop loss of 1335. This stock resisted around the 1330 levels yesterday, and that's where we've turned from. The volumes are supporting the downward move. The second one is on SBI for a target of 995, stop loss of 1046. Similar situation like Axis Bank. We resisted yesterday at 1050, and we've resumed the short-term downtrend today.
All right, take that point. Manish, always a pleasure speaking with you. Thank you so much for joining in. And let's get you some ideas for profit. Before that, look at Cartrade, up around 5% today. Had seen a big move in the last few trading sessions. Yesterday, there was a UBS note that came in, and they have a target price of 4,000 rupees on the stock. The stock didn't react as much, but now we are seeing some up move on Cartrade Tech.
Interesting, Manglam. What a year it's been for Cartrade, right? If you pull up the chart in the last 1 year or so, you'll see the stock had gone to around 1,800 odd because there was a lot of selling. How much of a challenge will AI be for the counter? And from there, there was a lot of buying. Just take a look at that. Yeah. In the month of March, April as well, the stock came down, I think, to around 1,600. And from there, let's take a look at that. Almost doubling, actually, from the lows that we saw.
Brokers is believing that there's still some more way to go. Over 30% gains from here on as well, as per UBS. Up 4,000 is their target price. But let's get you some ideas for profit. Our colleagues at Money Control joining in today. Neha Dave has a stock that she's tracking. Neha.
Today's stock idea is HDFC Bank. HDFC Bank's stock took a beating after the episode of chairman's resignation. Consequently, the bank is currently trading at around 1.5 times core book value estimated for FY28 after adjusting the valuation of subsidiaries. The valuation is attractive given that the bank delivered return on asset of 1.9% and return on equity of 16% in FY26. Going ahead, investors would closely track the development related to the reappointment of the current MD and CEO, whose term is ending in October. Apart from this soft factor, the street remains focused on 2 key variables, that is loan growth and net interest margin, both of which came under pressure since the merger. However, there has been an improvement in these variables since the past couple of quarters and is likely to improve further in FY27. The bank's loan growth has accelerated to 15% YOY as of June end, as per the business update released. And going ahead, the management has guided that the loan growth will surpass the industry growth from FY27 onwards. On the margin front, there has been a small uptick since past couple of quarters. There are certain tailwinds that are emerging, the impact of which will be gradually realized over the next 4 to 6 quarters. HDFC Bank is trading at a discount in terms of valuation to ICICI Bank. The valuation gap should narrow going forward. Long-term investors should accumulate this stock.
And thanks a lot for that, Neha. For the time being, we slip into a short break. On the other side, we focus on markets and stocks that are moving around. Stay tuned.
ए दया, कौन है रे?
मैं है
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी
Welcome back. A lot of stocks which are buzzing around. Let's address them. Nuvoco is one. A good performance coming in. The stock holding the opening gains right now. Nigel, take it away.
Well, that's right. It's holding on to some gains. And remember, Nuvoco has been a big underperformer. But the numbers look good. And it's the first cement company to get off the block. So the revenue is coming higher by closer to 9%. Consolidated volumes jumped up by closer to 5%, coming in at around 5.3 million tons or thereabouts. The positive was that the realizations, that popped up by close to around 7% on a sequential basis because they have high amount of exposure to East India. That could give them some good contribution, as well as premium products as well could have supported those realizations. So that was the bright spot. The EBITDA number, the operating profit, that popped up by close to around 10%. And the EBITDA per ton, on a sequential basis, it improved by close to around 80 to 90 rupees. Well, the street likes that very, very much, and that's at a multi-quarter high, coming in at more than 1,070 rupees. On a structural growth trajectory, the Vadraj cement plant, as well as the East India expansion that they're planned, that's what's going to drive their capacity to around 35 million tons or thereabouts. So now they'll have exposure to the west part of the country as well. And we'll have to see how that pans out, because they've taken a bold move, gone ahead and acquired Vadraj cement. How they ramp it up is going to be top of mind for the time being. The street likes it. A good start, multi-quarter high EBITDA per ton. We'll have to hear the management commentary from here on. But for the time being, a thumbs up for the street.
Thumbs up indeed. And 2 thumbs up for Biocon post the large trade. 9.5 crore shares worth nearly 3,600 crores changed hands. Mylan has exited the company, offloading its entire 5.5% stake. Sudarshan joins in with more. Sudarshan, is it just a case of supply overhang gone, or is it also fueled by some short covering?
So two major triggers for Biocon that, as you have talked about, one trigger, that is the Mylan exiting the company, selling its entire 5.64% stake. What exactly happened is the entire block deal happened in the block deal window, and the price at which it happened was at 5% premium to the floor price. So block deal price was 400 rupees per share. Floor price was rupees 378.50 per share. So Mylan had got these shares in Biocon because of Biocon Biologics deal that company had announced in early 2026. And after, because of the preferential allotment, Mylan had the stake of more than 6% stake, and now they are out of Biocon. Another trigger for Biocon is MSCI rigging and the flows that company might see. So the level or range for the MSCI rigging is from 440 to 445 rupees per share. Now the stock is trading around 440. So it is technically eligible for MSCI rigging. What exactly it would happen? So currently Biocon is part of MSCI small cap index. Now post the rigging, it can be the part of MSCI standard index. Now because of that, flows can be of more than $260 million. So that also will be triggered very closely, and MSCI rigging is likely to take place next month.
Got it. Thanks a lot for that, Sudarshan, for explaining that. As we speak, the stock at 440 rupees. The other one that's buzzing from the broader markets is PDS. It bagged a multi-year contract with the global supermarket chain. Divyani joins us to break that news piece for us. Divyani?
Well, PDS has secured a multi-year sourcing as a service contract with a leading French headquartered global supermarket effective from the 1st of November 2026 onwards. Now, under the agreement, PDS will manage textile sourcing operations across Bangladesh, Pakistan, India, Sri Lanka and Turkey for the French giant. And the company expects to handle approximately $250 million worth of apparel sourcing annually for the company. Now, based on the FY26 gross merchandise value of roughly around $2.2 billion US, the contract represents a potential incremental sourcing opportunity for the company with roughly around 11.5% of the FY26 GMV. So this is significant for the company, and the street is clearly taking note of this.
Significant indeed. The stock up close to 12% in a market that actually is trading in the red. Thanks a lot for that, Divyani. For the time being, slip into a short break, come back. We'll continue our focus on stocks that are moving around. Stay tuned.
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क, और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
Welcome back. Well, let's focus on the banking pack then. Sapna is picking up some information with regard to IDBI Bank and learns that the government has sped up the stake sale plan in the bank. Sapna, tell us what's the latest?
Well, that's exactly what it is, as you have put it very nicely, that yes, the disinvestment process for the strategic divestment of IDBI Bank has definitely been speeded up by the government. And just yesterday, two high-level panels have met consecutively. And also the departmental, group basically comprising of the Defense Secretary and Secretary DFS, they too have had discussions. So basically the two high-level panels, of course, are the CUD, that is the core group of disinvestment, core group of secretaries on disinvestment. It's headed by the Cabinet Secretary, and two consecutive meetings along with the IMG. So this is basically a clear indication that there is going to be a very visible acceleration in the process of divesting stake. 60.72% is what both LIC and government aim to disinvest. As you must be aware, some time back, the bids which had come in earlier for IDBI, they were below the reserve price. So there was a bit of a rethink at that point in time. It was almost thought that probably the process is going to be scrapped and the government has to redo it. But that's not what it is. The same thing is going ahead, except that there will be important changes that will go along. So that is what the CGD and the IMG have been discussing. We have to wait and watch as to when the transaction really finalizes and who the actual bidder is going to be. But this is very, very positive. Acceleration, speeding up, and going forward with the process.
Take that point indeed. Thank you, Sapna, and trust you to keep us, on top of the developments out here. The stock up nearly 4% right now. But let's talk about another key Supreme Court ruling on mining royalties today. The court has upheld the royalty computation framework and dismissed the challenges to the royalty on royalty provision. Ashmit joins in with more details. Ashmit.
Well, the concern that had been raised by particularly Kirloskar Ferris, which was the petitioner in this matter, was that currently the royalty framework is structured in a way that it has a cascading impact on the finances of the miners. What they were saying is that they're effectively paying royalty on royalty. Their argument essentially is that they're already paying the District Mineral Foundation. There's a contribution to that. There's another contribution to the National Mineral Exploration Trust. And this, importantly, is computed as a part of the selling price, which forms the basis for a computation of the royalty. So effectively, the argument was that this is a royalty on royalty and therefore should not be allowed. The Supreme Court has not agreed with that. Supreme Court instead has agreed with the center's position. The center's position was that there will be huge revenue losses as far as the state governments are concerned. In fact, one of the figures that had been cited by the center is that over the life of the mining lease, the loss just for iron ore would be as high as 7 lakh crore rupees over the life of the lease, and that it could be several lakhs of crores if one were to include other minerals as well. So that is the argument with which the apex court has agreed. The Supreme Court has dismissed the application by Kirloskar Ferris in this matter, and in doing so, giving clarity as far as the computation of royalty is concerned. As far as the impact is concerned, important to watch as far as miners are concerned, of course, a bit of a setback coming in the sense that the Supreme Court decision, in a way, has dashed hopes for a lower royalty burden. But on the flip side, it does give certainty to miners as to what this burden will be going forward. As far as the state governments are concerned, they're clear beneficiaries, a huge uptick for them in terms of royalty payouts by miners.
All right, Ashwin, thanks a lot for that. So we will monitor the developments out here. For now, it's a sentiment negative. But one stock which is buzzing in trade today is Container Corp, following its volume numbers that came yesterday during markets. If you look at the overall volumes that the company reported, were just shy of the 9% mark, and it was led highly by the EXIM segment. So the data comes up for you on the screen. The company's overall guidance was 9.5%. The company has reported 8.89%. But the reason why the stock is higher, because the EXIM volumes, the second point that you see out there, the guidance was 8%. And as against that, the company has done about 9.78%. And that accounts for most of the company's volumes. So, and as a result of which, the street has taken that with both hands. Domestic volumes much below street expectations. 15% was the guidance, and the numbers have come in at around 6%. But remember, the stock too, from levels closer to 900, has corrected to levels sub 500, and as a result of which, on lower volumes, we've seen a bit of a spike on Container Corp. But the other stock is Grasim, as it kickstarts today's session following the company's new acquisition. Nigel.
Well, that's right, Mangalam. A big deal that was announced overnight. Aditya Birla Renewables has acquired Sulin Ergi Power. That, in fact, remember, that's a subsidiary. Aditya Birla Renewables is a subsidiary of Grasim that's gone ahead and done this inorganic growth. The seller, as we know, is Shell PLC. Here are the details then. The deal is done at an enterprise value of around 17,200 crores. Sulin Ergi Power, where it has a cumulative contracted portfolio of around 5 gigawatt. The consolidated turnover of the last few years has been 1,100 to around 1,250 crores or thereabouts. What's the rationale? Well, the Aditya Birla Group says it gives an opportunity to expand its renewable energy footprint. It increases Aditya Birla Renewables portfolio from around 4.4 gigawatt to around 9.4 gigawatt. And they target to scale this even more. So they've doubled it with this transaction. They're not done. They say the next few years it should hit around 20 gigawatt. The debt in the Grasim's book standalone basis is around 6,900 crores. Consolidated basis is around 37,000 crores. But you'll be wondering, such a big ambition, how will it be funded? Well, they have some details. They say that it will be funded by a mix of debt as well as equity from Grasim and some investment coming in from Global Infra Partners, that is GIP. Remember, GIP is a wholly owned subsidiary of BlackRock. And to recap, GIP had invested close to 2,000 crores in Aditya Birla Renewables with a green shoe option of around 1,000 crores. At that point of time, that's December 2025, they were valuing Aditya Birla Renewable Energy at around 14,600 crores. The timeline for this transaction is expected to close in this calendar year itself. Brokerages, both Morgan Stanley as well as Citi, both of them have a positive stance on the stock. However, Citi believes that in the near term, there could be some kind of pullback on the stock, while Morgan Stanley says that it's perfectly aligned and it helps them scale up the renewable vertical. So they continue to maintain their overweight stance. Knee-jerk reactions, the stock turned closer to 100%. I think that's okay because the street appears to have more or less digested this transaction, going by the replacement value, going by the peers that trade on an EV upon EBITDA basis. So pretty okay. Markets down, stock down in line. Down 1% or thereabouts.
Take that point entirely, Nigel. And just before we take your leave, we can say that the market's cut its deficit slightly, about 30-40 points. When we started the show, it was sub the 24,100 mark. The Nifty was sitting with a cut of almost 120-130 points. And now as we speak, down about 93-94 points. And one of the bigger reasons for that is that there's been a slight recovery in the Nifty Bank by about 70-80 points and the IT index as well. So the Nifty IT index had actually seen a bit of a drop and now currently trying to ameliorate from those as well, just under the flat line for that index. But apart from that, let's look at Reliance. That's the stock which has moved to the high point of trade, and that's caused the bulk of recovery on the Nifty right now from the lows. Reliance has moved higher, and with that weight on the index, we've seen obviously the Nifty cut its deficit. Even the pharmaceutical pack is doing a lot better, obviously led by Biocon, but around that, ahead of the semi-finals, the World Cup semi-finals, the FIFA World Cup semi-finals, we have Z Entertainment, which is higher by about 4%. So they are obviously broadcasting that game in India today. But apart from that, we'll also have it being broadcast on the Doordarshan platform. But Nigel, who are you gunning for?
Who do you think are going to make the finals?
Can I tell you something? I don't know who are playing the semi-finals right now.
I'm going to go for England versus France in the finals. So let's see how that goes. My son believes that it's going to be Argentina versus Spain, but good to be on opposite ends. It promises to be an exciting next couple of nights because watch the game and turn up to work in the morning. If I don't, you know why.
For me, the more important part is that today Virat Kohli and Rohit Sharma are making their comeback once again on the ODI side. So I will monitor that, not taking place too far from the World Cup venue also. And you have England, and these guys are playing in England as well. With that, we'll wrap up on this edition of Chartbusters. Our director tells us the team of Trading Hour is waiting by. So stay tuned for that.
Good.
ये दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विथ मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
Good morning, you're with us here on Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Harmas Patakia. Joining me as always is Ritu Singh. Ritu, good morning to you. Well, the word of the day today could be, well, resilience, as was the case yesterday as well. 200-point gap down yesterday and we managed to end at the flat line. a 200-point gap down today, and we are yet again looking to recover from the lows of the day. 25,050 or thereabouts has the low, and we are around about 70 points off the lowest level of the morning so far. And it's been choppy, today being the weekly expiry as well of the Nifty contract, so that will also bring about its fair share of volatility today, possibly the last quiet sort of a day in terms of results before the earnings season picks up and culminating into a very action-packed Saturday that is going to keep Ritu very, very busy, isn't it, Ritu?
Yes, Hormaz. I mean, you name all the top private banks and they've decided to all come together and report all of the numbers on the same day on Saturday. But that aside, good morning to you. Your resilience is the word of the day. And, the market's looking to recover a tad, at least in the last half hour. And so the banking pack, the IT pack, which has been under pressure. I mean, they're still trading very much in the red, but looking to make a bit of a recovery as we speak. The volatility index, which had spiked up quite sharply to about 8.5% yesterday. That's also at about 13, it's up just about 1.8% as we speak. The market breadth shows you there's almost 2 stocks that are declining for every 1 stock that is advancing. But that said, there are some pockets of green here and there, where you can look to. For instance, the metal pack is doing relatively better today. Pharma, media as well is holding up. But the realty pack, PSU Bank, auto, financial services, of course, banking and IT very much in the red. But as always, let's go across to Hormaz to give us a list of the key movers and shakers in today's market.
Something that the bulls might be also taking heart from the fact that although Asia has been very, very volatile, they are also looking to recover from the lows of the day, even though the oil prices have gone up significantly. We'll get to that in just a bit, but 24,120 is where the index currently is. The bulls would be happy for the fact that, yes, Asia has now turned positive, and the fact that we have managed to hold on to 24,000 yet again, at least as of now. So that is one good thing. Look at the Nifty Bank as well. At around about 10:30, the Nifty Bank had also slipped to the lows of the day, losses of almost over 400 points. That too is seeing some recovery from the lows of the day. But you must say that the Nifty is looking slightly better than the Nifty Bank in today's trading session. So still a 500-point cut on the Nifty Bank, and is looking to hold on to the 57,500 level on the downside. Another point of concern today is the currency. And for the first time in almost a couple of months, the currency has crossed 96, 96.08 right now on the dollar rupee. And of course, crude. Brent back at 85 a barrel, and the bulls would be looking or would be hoping that this does not go any further higher, because as more and more the oil prices keep rising, and that is a detriment for our own markets. Of course, plenty of stock specific action, earnings reactions that came in yesterday. Look at ICICI Prudential, AMC is a negative reaction, but brokerages are fairly optimistic, seeing targets of close to 4,000. HCL Tech is now extending its losses. Brokerages are worried that the kind of growth that the company is projecting, it's not enough to justify the valuation premium that it is commanding over TCS and Infosys. And therefore, while TCS and Infosys are doing fairly okay, HCL Tech is down 3%. The positive reaction on the morning though is Nuvoco Vista is 8% higher on the stock after some very, very strong results. Look at the newsmakers. The stock of the morning has been Biocon. 7% higher now on the stock. A potential MSCI inclusion as well. We'll get more on this during the course of the day. Welspun Corp after an order win, now over 110% higher on a year-to-date basis. Concor after its business update is up 5%. And IDBI Bank, some more news with regards to its disinvestment, 3% higher there as well. Real estate was a high-flying sector since the start of the month. There's some profit booking setting in here today. Lodha is down 3, Godrej Properties 2, DLF, Sobha also seeing some bit of cuts there, anywhere between 1.5% to 2.5%. And lastly, take a look at some of the small cap movers in today's session. Fino Payments Bank, we'll talk about this as well on the show, 13.5% higher, extending its gains from yesterday. Bajaj Consumer numbers were strong, but of course the stock has had a very, very significant run up during the year, up almost 150% year to date. Manglam spoke about this yesterday, 11% lower on this one. MTAR Tech, another 5% lower circuit. The stock is now under stage 4 of the ASM framework, so that too is having a bearing on the stock, down well over 25% now from its 52-week highs. And Newgen Software did very well yesterday, seeing some profit booking in today's session. And lastly, stocks at 52-week highs. PDS on the back of an order win is up 11%. Jai Bharat Maruti is doing well, as is Sem India Projects at 52-week highs as well today, Ritu.
All right, Hormas, thank you very much. That sets us up very nicely for inviting our next guest on the show. Mukul Kochar from Investec Capital Services joins us now to discuss market fundamentals, his top sectoral picks, and a whole lot more. Mukul, thanks always. A pleasure to have you here on the show. And let me start with, in your note, you talk about the FTAs, and it's a good day to talk about it, given that 15 July tomorrow is when the India-UK FTA comes into the picture. Now, in your note, you talk about how India's trade connectivity is seen jumping from 11% to 60%. Factoring in all of these deals that are in the works, will be in the works, hopefully, fructify as well. How much of this 60% is really priced in the market, especially when you yourself in your report point out, past trade deals, whether that is ASEAN or Japan, then possibly work out the way they were expected to. So how much of this is factored in the market currently, and what is the best and worst case scenario you're building up?
Yeah, so, some of this, of course, is priced in because what these trade treaties impact is our goods, manufactured goods exports, because that is what the trade treaties try to target. And looking at the multiples of some of the manufacturing companies, you can see, or the industrial set, you can see that some of that, optimism is already in the price. Having said that, what I remind people is that we are starting from a very low base. In the report, we have also mentioned that India's export market share, which is our goods export divided by total global goods exports, which stands at roughly $22 trillion. Our export market share is only 1.9%. Yeah, our GDP market share is 3.4%. Our services export market share is 4.5%. So we massively under fire when it comes to goods export. So despite high multiples, in some stocks, we are still optimistic on the sector because the base is very small. We expect a multi-year growth trajectory from here. One catalyst, of course, being what you mentioned, is our trade connectivity improves starting this year. Yeah.
Mukul, morning. Thank you for taking out time. So, well, in this that you highlight, what among the exporters that you like the most? Do you like textile names? Do you like these Alcobev companies? Or do you like the pharma names, for that matter, the pharma exporters? Of course, UK is a completely different market altogether. They have a more US-oriented exposure. But what about these export-oriented names, or maybe even the shrimp names for that matter?
Yeah. That's a great set of sectors that you mentioned. By the way, we can't go specific to companies, but I can point out the sectors, and typically the market is top down, bottom up anyway. So just, the sectors that benefit, first of all, the one sector that will benefit the most, I feel, is electronics. Yeah. And there's multiple reasons. One is the fact that we have the capital now to invest in electronics. It's a heavily capital intensive business. Our balance sheet repair is more than complete in India. Banks have started lending again because banks are overcapitalized. So we can do capital intensive business in India. Incidentally, in electronics, we have huge engineering capacity as well to drive the sector forward. So that's one sector that is top of the recommended list. By the way, our electronics export market share is only 1.2%. China, which is the number one, has a 25% electronics export market share. Critically, what will also help us in electronics market share is that we are part of the Pax Silica trusted network, and China is not. There's a lot of suspicion from electronics goods coming in the Western world from China, and India being a trusted market, it's not just diversification away from a single large source. It's a diversification into a trusted network. So electronics is top of our recommended list. We have a few stocks that we are sort of talking about to our investors there. The second sector that comes in is autos and auto comps. Again, here the stocks are not even priced for manufacturing exports, because Ritu made a very important point, how much is in the price. I think it's not in the price here at all, because when the conversations on this sector take place, people start taking into account 5 to 6% passenger vehicle growth and similar growth in two-wheelers. When you add an export element to that, this growth number automatically just goes up. I think autos and auto components will also be an export area over there. In auto components, we'll be taking market share from countries like Thailand, etc. The next sector, of course, is textiles. Very natural to sort of look at that. For many years, our textile export has not grown because we've been disadvantaged when we sort of go out to the market. Just to let you know, the top exporters in the world, number one is China, second is Vietnam, third is Bangladesh, and fourth is India. Yeah, and fifth is Turkey, and then Pakistan. Out of this list of 6 countries I mentioned, the countries that face the most onerous tariffs in the bigger markets in the world, the biggest market, import market is Europe, is China and India. Yeah, Bangladesh is tariff-free, Vietnam is tariff-free, Pakistan is tariff-free for different reasons, and Turkey is tariff-free. So we have a 12% disadvantage to all our major competitors, and that goes away as these trade treaties become operational. Then you have chemicals, including the pharma pack. Pharma actually doesn't benefit as much as the trade treaties because it's an essential good and largely tariff-free in most countries anyway. But pharma, we have massive expertise, and we are insourcing some of the back-end like APIs. So that's another benefit. And then finally, you know, we have agri-commodities that comes in. These are the broad sectors that I expect us to do well in, and I'm recommending clients to go there and look for winners.
All right. So, Mukul, apart from this trade theme, I mean, you spoke about pharma, you spoke about textiles, autos, electronics. What are the other themes that stand out in the current market, perhaps, that, are going under the radar? Where would you put incremental money? I mean, FTAs aside.
Yeah, so on this, just one point I will make additionally on the manufacturing export theme. It's not just the FTAs. Our energy cost, because of the adoption of solar, including open access, our energy cost has come down, which has made us competitive. The other comparison we made is we've done a 25-year correlation of our export market share with capital expenditure. So if capital expenditure by BSE 500 company goes up, our export market share goes up. And this capital expenditure was hampered by 7-8 years of balance sheet repair in the Indian industry. And that balance sheet repair is done now. So that's another sort of, aspect that benefits the theme that we are speaking about. Apart from, manufacturing exports, which I think is going to be the, potentially the most significant driver of the economy going forward, today we see that the banking sector, is also, undervalued in a manner. It is not a thematic the way we speak about manufacturing export. Thematic being that it's the manufacturing export, if you're expecting a 25% EPS CAGR in this theme, banking will compound at a 15% CAGR, I feel. But that sector is massively undervalued today for various reasons that we can go into the past. And here also we are finding winners in the financial services sector.
Well, Mukul, very briefly since you brought up the energy space, the renewable energy space, and in light of this large deal that has been announced by the Aditya Birla Group, acquiring that renewable energy business from Shell, what sort of opportunities does this indicate that are open in the market? Any places you see favorable risk rewards?
Yeah. So this is a great space to be invested in. Our electrification in India is still quite low relative to where we should be compared to, let's say, Japan or Korea or China for that matter. Our electrification is also almost 10 percentage point lower. Yeah. And, solar is a great energy source for us because India has a very high solar incidence, number of hours of solar available. So we produce one of the cheapest solar electricity in the world, just after Saudi Arabia. So this electrification is going to be a massive theme going forward for a cheap source of energy, cheap, clean source of energy. And here there is a lot of sort of companies that one can play in, which are also reasonably priced. So again, we are looking at a bunch that this sector actually plays into manufacturing as well. As a theme. So again, utilities and especially utilities on renewable, very, very good play in India, I feel.
Mukul, pleasure having you today. Thank you for spending time and joining us on the show. Looking forward to the next interaction as well. We'll take a short break. On the other side, focus on the bond markets with Manisha Gupta on the other side. Stay tuned.
Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सब
Welcome back. As promised, let's get you all of the action from the bond market, and Manisha Gupta is joining in to fill us in. Manisha.
Well, thank you so much for that. It's a day that has started on a weaker note for the Indian rupee and for the government bonds as well. The impact comes in from the global markets as well, where we have seen overnight rise in the U.S. Treasury yields. It also has to do with the crude oil prices, which have gained up by 10% overnight, trading very close to that $85 a barrel mark. We're also looking at escalation of tensions between West Asia, which has soured the market sentiment, as it were. The U.S. president has called the strikes as a multi-day campaign, so this perhaps could just continue for days to come. We already have seen 3 nights of constant strikes there. There also are concerns about selling from FIs, as they might seek safe haven and take money out of India. But remember, the month of June has been quite strong when it comes to FI inflows into the asset class. It also has to do with the overall numbers that have started to show already. So if you look at the FI numbers on Monday itself, it has been a first day since 4th of June that we did see some selling coming in, and that to the tune of 8.7 billion rupees there. What led to limiting the losses was buying from the public sector banks, because they bought gilts worth nearly 40.39 billion on Monday. How long can this go on is something that the street will keep an eye on. The focus also is going to be on about the 248 billion rupees state government bond auction. That result is expected today. The WPI data for the month of June comes in at 12 o'clock, expected at 9.3% for June. That is another thing that the street will take cues from. And then it is about inclusion of India gilts in Bloomberg index. That announcement is expected anywhere between July. Some are expecting in August or September as well. That's another thing that is keeping the hopes high. And finally, you have some private bond issuances happening in the market today as well. There's a list of some 4 or 5 companies. Top on my list is Vagoli Estates. They're looking to raise 2 billion, and they're doing it via issuances of bonds which are maturing in 2029. And then you have Mizo Capsave Finance. They are also looking to raise up to 1.5 billion. They're doing it via issuances of 5-year bonds maturing in 2031. Nuvama Wealth Finance is on your screens. They are looking to raise nearly 3.5 billion, and they are doing it via bonds which are maturing in 2029. And then, of course, there is Muthoot Finance as well, planning to raise nearly 15 billion, and they are doing it via reissuances of bonds which are maturing in 2029. So some interesting names coming in which are looking at bids today in the day.
Manisha, thank you for those updates there from the bond markets. But while the equity markets are looking to recover from the lows of the day, what's not, or what has moved to the lows of the day is HCL Tech. And it's witnessing some profit booking after its results. A couple of downgrades coming in as well. Rima is here with that breakdown. Rima.
Thanks so much for that. So just still yesterday, HCL Tech was up 14% so far this month. So seeing some profit booking despite good numbers. In fact, what we are seeing is rotation out of HCL Tech into names like TCS. TCS was high yesterday. It's followed it up with some more gains today. And peers are playing catch up because still yesterday, HCL Tech was clearly the standout gainer so far this month, while TCS and Infosys were lagging. And today, the gap between the two is narrowing. Two downgrades also visible on HCL Tech today. So CLSA has downgraded the stock to a hold from an outperform. They say the stock trades at 16 times and is fairly pricing in most of the positives. They're forecasting a 2.7% organic constant currency growth for the company in FY27, lower than TCS at 3%, and hence they believe the current 15% premium to to TCS is fairly valued. Citi too has downgraded an HCL Tech to a sell, cut the target price to 1,040. They believe the valuation premium of HCL Tech to peers like an Infi and TCS is very high. On the flip side, though, Nomura is still bullish. They've got a buy call. Goldman and HSBC have a hold rating. That said, what we are seeing today is just profit taking. The numbers, the internals were fine. The company recorded its highest ever deal wins in Q1 at $2.4 billion. Their AI revenues are growing at 60% plus on a year-on-year basis. And the company has announced a 3,500 crore play into the data center business, which has also seen an extension of participating in the AI ecosystem and up the value chain. So all that is fine. But my guess is today the stock is correcting on account of the fact that it had run up in the last couple of days, and valuations too of HCL Tech were trading at a premium, and some analysts on the street believe that maybe the premium valuation is a little unjustified at the extent at which it's present now. Back to you.
All right, so some correction after that run-up. Rima, thanks very much for bringing us that update. We'll slip into a short break on that note, but don't go anywhere. We're back with more on the markets and some stock-specific news when we return.
ए दया कौन है रे?
मैं है
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चौली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा,
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया, और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी, और बजाज फिनसर्व इनका साथ देता है।
ए दया कौन है रे?
मैं है
सखू।
Welcome back. It's time for our special segment, Quarter se Quarter Tak, where we bring you earnings expectations from each sector. Today, Nigel will tell you how the first quarter is likely to be for the metal stocks. Over to you, Nigel.
Well, Q1 FY27 earnings season is set to begin for the metal sector, and expectations point to more or less a mixed quarter. While for ferrous companies, well, they're likely to benefit from stronger steel prices. Non-ferrous players could see support coming in from elevated base metal prices. Let's start off with the steel companies first. The average steel realizations are expected to increase by around 4,000 rupees per ton on a quarter-to-quarter basis. That's driven by price hikes that were implemented over the last 2 quarters. However, higher realizations are likely to partly offset by rising input costs, like coking coal prices, which remain elevated, and iron ore cost as well did move up higher in the past quarter. On the volume front, well, steel companies are expected to report around an 8% year-on-year growth, although volumes may decline by close to around 14% on a sequential basis, but that's because of the seasonality factor that did play out. The capacity ramp-ups at Jindal Steel as well as at JSW Steel, that's what's expected to support the overall shipment growth. Overall, the sector margins are expected to improve by roughly around 1,500 rupees per ton in Q1 FY27. That's supported by elevated flat steel prices. That said, the benefit is likely to be moderated because of the higher coking coal cost as well as seasonal weakness in rebar prices in particular. Though HRC prices have remained pretty stable, the rebar prices have come in for some profit taking, or in fact, there's come in for some pressure as well. And now we're getting to a seasonally weak period as well. So rebar prices could remain under the weather. For non-ferrous companies now, expectations remain broadly positive because commodity prices have been strong, and that's what's going to support earnings for the past quarter. On a sequential basis, your aluminium prices are up by 12%, zinc prices are up by close to around 7%. However, silver prices have pulled back in the past quarter. So let's have a check now on the company-wise EBITDA expectations. Hindalco, that's expected to report the strongest EBITDA growth at around 14%. This is as per Jefferies estimates on a sequential basis. Followed by JSW Steel, that's expected to deliver a growth of close to 11% on the EBITDA. On the other hand, Hindustan Zinc is expected to see a marginal decline of around 1%. Coal India could report a fall of close to around 4%. And Tata Steel is expected to report a decline of close to around 7% in EBITDA, followed by Sham Metallics at around 11%, and Jindal Stainless, which may see the sharpest decline on a sequential basis of around 13%. Overall, the quarter is expected to reflect the improving steel realizations and resilient base metal prices, although higher input costs and company-specific factors are likely to keep the performance a little bit mixed across the metals pack.
All right, Nigel, thanks very much for bringing us that update. But let's shift focus to some specific stocks. Sai Technologies and Privy Specialty Chemicals. These are some of the names that are buzzing on the back of positive brokerage reports that have come in. Let's get in Sonal Bhutra for more details on this one. Sonal.
Well, yes, Investec has initiated coverage on Sai Technologies. They speak about 3 things that are working for the company. They call it a rare combination of market leadership. There's annuity-like revenues that the company receives, strong cash generation, and emerging high growth optionality as well. It is one of India's dominant payment card manufacturer with a market share of around 31.9% in FY25. And that's why they are forecasting a revenue growth of around 12% and profit growth of around 14% in terms of growth in the next 3 fiscal. It operates in an oligopolistic industry with high entry barrier, and there are recurring revenues as well, the annuity model that the broker spoke about earlier. They initiate with a buy rating and a target price of 430 rupees a share, so they're valuing it at 21.7 times FY28 PE. Of course, there are risks to this as well. If there are delayed recovery in card issuances, execution risk in some of the segments, customer concentration, and increasing competitive intensity as well. So these are some things that should be kept in mind while looking at this stock. The other initiating coverage is from Incred on Privy Specialty Chemicals. They have an ad rating on the stock. They say company has evolved from a 2-product company to almost 75-product company, an integrated supplier now. And the company is looking at spending around 1,200 to 1,250 crore rupees, which will boost the capacity of the company and will support 10% volume growth in FY29. The company has seen 10.6% volume CAGR in last couple of years, and Incred expects this trend to continue as well from FY21 to FY26. Crude sulfate turpentine, which is one of the raw materials, the prices there are relatively stable, while gum turpentine, that is the other raw material where prices have been quite volatile. But company has the ability to switch between these two, and that's why they are able to weather any margin headwinds going forward as well. They expect gross margins to remain around around 48%, EBITDA margins at 25 to 26%, and they're applying a conservative 35 times one-year forward earnings multiple to the stock price, and that's why the EPS that comes out of it is at around 137 rupees a share, and that's why the target price is at 47.96 rupees a share. They have an ad rating, so despite being positive in it, they have not issued a buy rating on the stock, but starting with an ad.
Sonal, thank you for that. A couple of bullish brokerage reports coming in. One on Sensex Technologies, the stock still below its IPO price, and Privi Specialty Chemicals, that too trading gains of around about 1.5%. Take a short break. Market technicals on the other side with Dharmesh Shah of ICICI Securities and some trading ideas as well. Stay tuned.
Congress for
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चौली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ यार।
और फिर एक दिन उसे एक मौका देखा,
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
Welcome back. Still 80 points lower on the index, but still managing to hold on to that 24,100 mark. On the downside is the Nifty. The Nifty Bank, well, is still managing to defend that 57,500 mark and is looking to recover from those lower levels. So from around about a 550 odd point cut, the Nifty Bank has recovered some 50-60 points from those lows. And a similar story for the broader markets as well, in line with the Nifty. Good time to get in Mangalam, who's at the FNO desk, to tell you the latest on today's weekly expiry. What's the FNO data indicating now, Mangalam?
Well, it's a range-bound move that, the option writers are playing for right now. We're back to times where you looked at the markets, they're lower, but you also, equated them to the macros right now. We had forgotten to look at crude levels and rupee levels because they were so stable over the last month or so that over the last 2 or 3 trading sessions, they've come back in focus. And now as we speak, Brent above that $84 per barrel mark, and the rupee also weakened past that 96. Indices in focus, as a result of which are the same ones that actually were moving around, when there were the wartime peaks. So we had the metals doing well, we had pharmaceutical stocks doing well, and the realty pack, which had actually come back, is now seeing a bout of selling. So that index too down by about 2% right now. But the important part, amidst all of this, we have moving averages which have moved much higher, and that means that there is strong support for all the frontline indices right now. For the Nifty, it's the 20-day moving average and the 100-day moving average. Incidentally, yesterday's low was the 100-day moving average at the 24,000 mark. For the Nifty Bank, so long as it holds above the 200-day moving average, no real problems. Bulls will continue to fancy their chances and look at buying dips. And increasingly, we've seen some support come in from the IT index as well, which over the last 5 or 6 trading sessions has played a decent knock. And so long as it holds the 50-day moving average, there's no problem for that index as well. But ahead of expiry, we have the 24,100 straddle, which is fairly active in trade. So the 24,100 put has seen a fair amount of writing, 35 rupees premium, telling you around 24,050 thereabouts is where support starts to kick in. And if you look at the 24-100 call as well, that is equally active, and that has a premium of almost 55 rupees. So those who are writing this straddle, which is a call and a put together, are playing for a premium of almost 85 to 90 odd rupees. So between 24,010 to about 24,210 is where the range is what these option writers are playing for, a 200-point range, 24,000 to 24,200. But amidst all of this, a lot of stocks on our radar. We have shorts building up on Ashok Leyland, which has been a bit of an underperformer in today's trading session, down about 2.5%, and some longs built on Polycab. That stock has been a buzz, and that stock's actually moved to the high point of trade with a lot of long positions backing that counter.
Anklab, thanks very much for getting us that update from the F&O desk. Let's bring in Dharmesh from ICICI Securities for a quick technical check of the markets. Dharmesh, very quickly, what are the near-term levels you'll watch out for? We've been able to defend that 24,100 mark, but it's been quite choppy and narrow. And also your top stock picks in this current market.
Yeah, so good morning. Absolutely, I think so. The market has been too volatile in the last few trading sessions, but the levels to look out for from the short-term perspective, I think so. The 50-day moving average is something that important to be watch out for, which is placed at around 23,800 to 23,900. And if you look at the market for last 3 weeks, I think so, we have been trading in this range of 23,600, 700 on the downside. On the higher side, again, 24,200, 500 has been acted as a resistance. So we believe, I think so, look like the way the things are panning out and the way the market responding to the 50-day moving average, respecting even in case of the crude spiking back to 84, looks like buy on dip should be something which is working fine at the current levels, where 20-day moving 50-day moving average will be a very strong support for the Nifty, 23,800 on the higher side. Again, we believe 24,400 to 500 will act as an immediate resistance. So it's more of a stock-specific action likely to continue with more of a consolidation going forward. As far as stock specific is concerned, yes, we remain to be constructive positive for telecom space as a whole, where Bharti Airtel remains to be our top pick. Now again, Bharti, if you look from the long-term picture, I think so the way the stock has been respecting to the long-term trend line, it looks like I think that the way the weekly setup looks more promising for Bharti, making part of higher bottom formation, looks for a target of around 2030, keeping a stop loss of 1875. Apart from Bharti, again, NBFC space looks more promising from the current levels, where again the financial services index itself has seen a breakout of the last 3 months of consolidation, indicating I think so more upside likely in the coming days, where PNB housing again remains to be our top pick. Again, PNB housing, if you look at the chart from the medium term perspective, a downward sloping channel breakout supported by strong volumes, indicating I think so the days are going to be much better for overall housing finance companies, where PNB housing looks for a target of around 1,200, keeping a stop loss of 998. So Bharti Airtel and PNB housing remains to be our top pick.
Dharmesh, thank you for sparing time and joining us today on the show with your views on the index and your stock recommendations as well. On to some more market opinion then. Soham Asset Managers' Sanjay Parekh earlier today talked about the stocks and sectors that he likes and the themes that he's bullish on. Listen into what he had to say.
We moved up to large cap. We said that which are the leaders which are better off. And then you write that we also had hedges through, Vedanta Aluminum or, even metals, Vedanta standalone. And you do get, even Reliance, we believe, is better off in the sense it's not, it's not going to get negatively affected. So some of the large players is what we invested in. And then leaders which will get less affected, like some of the telecom names, barring the crude part, which the diesel price in the tower generally is insulated. So that's where we positioned our portfolio, and it's worked well till now for us. IT, which you always been covering so well, we've increased our weight to IT recently in the fall. We've added Coforge. We increased our exposure, and so we've reduced our underweight, but we've increased the weight to IT, to Infosys, which was our existing holding. So that's where our overall, and then real estate we like because the opportunity is pretty large. So we do own DLF, and a recent entry we've done into Lodha, that is around 15 days back. So that's the way most of, and then Lenskart, which is broadly insulated, or Eternal, we have small weights. So this is how our portfolio is positioned, which has helped us as a large cap buyers and avoiding the fall.
Okay, let's take a short break. But on the other side, we'll get you more on the markets. We'll focus on specific names like Fino Payments Bank, which has seen a massive surge in the last 4 sessions. Welcome back. For the markets, still trading with cuts of more than 100 points now, 24,108. Let's see if it holds up above that 24,100 mark. The Sensex too trading with cuts of about 370 points as we speak. But, one stock that has been bucking this trend, and at least for the last 4 sessions, Fino Payment Bank, what a phenomenal run. A 4th consecutive session, it is up. The bank, of course, reported a strong business update for June just yesterday. There was good growth in deposits, digital customers, even though the transaction business continued to moderate. So it opened more than 3.1 lakh new accounts, up 31% from a year ago. But the average deposits also increased to about 11% from, to 2,755 crore rupees. The active users on FinoPay app have also risen 38%. So even with all of that, the standout was the loan referral business, where disbursals have surged 253% year-on-year to 240 crore rupees as the bank continues preparing for its proposed small finance pack transition. Transaction throughput, however, has declined 35% to about 2830 crore rupees, with the bank attributing that fall to the shift from cash to UPI and saying the pace of decline has eased in the current month. So stellar growth there apart from that. And, the street expects lending to only pick up from here as the bank makes that transition into a universal bank. But on the back of to a small finance bank, but on the back of these updates, Fino Payment Bank shares have surged 21% today. They were up as much as 24% or so, but have cooled off from that high, taking the gains to nearly 35% in the past week. 34% in the last 1 month. And even after this rebound, though, the stock remains down almost 29% when you look at it on a year-to-date basis, and almost 36% in the last 1 year. So fundamentals, Hormaz, they're looking strong. Fino has had a phenomenal run. What are the technicals saying?
The very interesting chart pattern that Fino Payments Bank has shown up. As you mentioned, over the last 4 sessions, the stock has been on an uptrend. 40% now the stock has gained in the last 4 trading sessions, was up 20% almost yesterday, adding another 12, 13, 14% in today's session as well. But, the volumes that the stock saw in yesterday's session and in today's session are the 2 best days in terms of volumes on record for the stock. It had gone public in 2021, and since then it has never seen that kind of volumes that it has seen in yesterday's session and in today's session. In fact, in the first 2.5 hours of today's trade, today's volumes have already crossed Monday's volumes. So that's the kind of volumes that you are seeing on Fino Payments Bank. Even yesterday, the stock was before this 4-day winning streak, the stock was on a 13-day losing run, and after this 13-day losing run ended, the stock fell to its 50-day moving average, took support from there, and then staged a rebound from the 50 DMA. And as a result of this 4-day up move, the stock has now broken above its 100-day moving average, which was at 147. And now the next level to watch on the upside is the 200-day moving average, which is still some distance away, but is around about 208. So around about 25-30 rupees from current levels for Fino Payments Bank is where the 200 DMA is. Now, why is the 200 DMA significant? That's because of the fact that it has not tested or crossed that level in all of this year so far. The last time it was above the 200-day moving average was between September and December of last year, and it broke below that on the 16th of December in 2025. Now, the last instance when the stock was above its 200-day moving average, when it broke above that in September, which was around about the 29th or the 30th of September, within the next 3 weeks, the stock had gained almost 30%. And then it kept yo-yoing around those levels as well, from around 350 odd to around about 430 or so. But so the 29th of September low to the 21st of October high is what I'm trying to mention. But even after this kind of up move, the stock is significantly below. You mentioned YTD, and on a 12-month basis, from its IPO price, which is 577, the stock is still down almost 70%. So a big underperformer is Fino Payments Bank. Despite this 40-odd% up move that you have seen over the last 4 sessions, the stock is still a big underperformer. But of course, not a recommendation by any means, just chart observations is what we are seeing. And of course, investors advised to do their own due diligence and research. Take a short break. More on the markets and macros on the other side. Stay tuned. Welcome back. Well, the biggest IPO of the year so far has opened for subscription today, and that's SBI Funds Management as the 11,700 crore rupee issue. Of course, after the pre-IPO fundraising and so on, the issue size has come down as well. Divyani is here with all of those updates. Divyani, tell us more.
SBI Funds Management is raising 11,692 crore rupees and its issue opens today. Now, it is a pure offer for sale with 20.37 crore shares being sold by its promoters SBI and Amundi. Now, the price band is set at 545 rupees all the way till 574 rupees per share, implying a market cap of roughly around 1.17 lakh crores at the upper end of the price band, with the price to earnings set at 38 times its FY26 PAT. Now, coming to SBI Funds Management as a company itself, is the largest asset management company in India with over 12.5 lakh lakh crores in mutual fund assets with a market share of 15.3% at the end of FY26. Now, it's a partnership between India's largest lender, that's SBI, and Amundi, which is a leading European asset management firm. Now, it's one of the largest PMS AUMs with 16.88 lakh crores, out of which around 92% of it comes from Provident Fund and EPFO mandates. So keep in mind, those are very low margin products for the company. Now, coming to the financials, the revenue for FY26 came in at 4,390 crores, growing at a CAGR of roughly around 26% since FY23, while PAT came in at 3,067 crores, growing at a CAGR of roughly around 31% since FY23. Now, it has already garnered roughly around 2,663 crores from anchor investors at 574 rupees per share, and some of the key anchor investors include HDFC Mutual Fund, ICICI Prudential Mutual Fund, Capital World Investors, GIC, LIC of India, among others. And now the issue is also open to the public from today all the way till the 16th of July 2026.
Devyani, thanks very much for bringing us that update. Now, earlier we caught up with the management of SBI Fund Management. Joint CEO DP Singh says clocking in 5,000 crore profits is possible by FY28. Listen in to that conversation.
Assuming 25-26% growth, 5,000 crore net profits in FY28, which gets us a multiple of about 24 times. Is that the right way to look at the? Is that the right multiple, Mr. Singh?
So many factors around it, but if we go by our past history, the way we have been growing, then definitely yes.
Okay.
But there are always in the markets there are uncertainties. It could be more than this, it could be a little less than this. But the growth rate, the more and more financialization happens in the country, SBI Mutual Fund is at the forefront. We will get the maximum benefit. The moment today the biggest friction in growth of mutual fund business is the way KYCs are being done. These small players, the way it's a linkage between the remuneration for acquiring a customer and all efforts to be bring in. So that is not working. The moment that friction is over, which is likely to happen very, very soon, and once because all the bank accounts are now KYC compliant. The moment any bank account which is KYC compliant frictionlessly can part money in mutual fund, I think that will be the biggest revolution, and the number which is there today, only 6 crore investors, that will multiply like anything, and that the number could be anywhere. I'm not saying as much as number of bank accounts are there, but at least 20% of the bank accounts will be the mutual fund investors.
As your equities, which are actively managed, compound at 20-25% on an annual basis from here on, what would your blended yield look like going ahead, say 2 years or 3 years down the line?
I think the way to think about it is that today the best in class is close to about 40-44 basis point. I think we should come very close to that because clearly, as you see, the active participation going up. But at our scale, that's a difference. The blended yield for a smaller player at 40 basis point and at a 13 lakh crore player is a completely different way to think about it.
All right, let's get you the macro signal for the day. Now, as microfinance lenders head into the June quarter earnings season, the big question is whether the worst of the credit stress is finally behind. And the first signs of a turnaround are here. So look at the data. NBFC MFI credit has grown by 14.5% year on year as of end of March, turning positive after 7 quarters of consecutive decline. And for a sector that has been battling rising delinquencies and weak disbursements in the last 2 years, that is a very important shift. But, it's not a broad-based lending revival yet. The number of active borrowers have actually fallen by 22.7 lakhs in the March quarter alone, and that suggests lenders are being far more selective. They're growing their loan books, but without aggressively adding new customers. So they're writing bigger loans to smaller, a more selective pool of borrowers to stay cautious. And at the same time, the share of borrowers with loans from 3 or more lenders has also fallen to 9.7% as of March. Now, that is a sign that the focus remains on portfolio quality rather than chasing growth. Now, the improvement is also showing up in asset quality. So the share of loans that are 31 to 180 days past due fell to 1.8% in March, which is down from 4.4% as recently as September of 2023. That is the peaks that we saw. Now, credit costs for these NBFC MFIs have also come down as provisioning and write-offs also came down. But RBI itself, in its latest financial stability report, flags that costs remain elevated relative to that September base. So it's not exactly a very clean bill of health yet, but it does suggest some normalization. So even as loan growth returns, lenders continue to reduce exposure to borrowers with multiple loans, reflecting tighter underwriting and more disciplined lending. And that is a very different strategy from the rapid expansion that the sector saw before the stress cycle began. So we'll have to keep an eye out on how these June numbers come out, which will be in the next few days. And on that note, we're going to wrap up this edition of Trading Hour. From Hormaz and me, it's a goodbye. But stay tuned, Halftime Report will be up next.
war and
Stocks come in for selling after Brent jumps to near $84 per barrel and the rupee slides to below 96 versus dollar. Realty, autos and NBFCs drag while metals and healthcare eke out some gains.
After its recent $1.8 billion RCB joint acquisition from United Spirits, KM Birla Group has snapped up Shell Spring Energy via Aditya Birla Renewables, a Grasim venture at an enterprise value of around $1.8 billion to be co-funded by BlackRock.
Biocon leaps after Mylan sells its remaining 5.6% stake received on sale of its biologics business to the Indian pharma major. The sale makes the Biocon stock eligible for inclusion in the MSCI Standard Index, analysts say.
The stocks of HCL Tech stumps after a pre-earning rally despite beating muted street estimates. The IT major keeps guidance unchanged but unveils a plan to invest 3,500 crore rupees to build data centers.
CNBC TV 18 has learned that the strategic sale of IDBI Bank is being put on the fast track with several meetings of ministerial group, core group of secretaries and DPAM having taken place on the matter over the past few days.
The near 11,700 crore IPO of SBI Fund Management opens today. India's largest fund manager has already seen a marquee list of investors being allotted shares in the anchor book. Hello and welcome to a halftime report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Patra and with me Sonal Bhutra as well as Vinny Motiwala. Well, it is turning out to be a session where we are seeing some amount of a downtake for the markets. We have the Bank Nifty, in fact, which is underperforming at this point in time. So what really seems to be weighing on the markets is obviously Brent crude, which has seen that jump above $80 per barrel, in fact, close to $85 per barrel. We have the FIIs, which sold, the largest that we've seen since June 9th in the equity markets. And we also have the rupee, which is at the lowest level that we've seen since May 22nd. So all of these, in terms of a combination, is not boding well for the markets. We have the Nifty, which is currently lower by around 0.4%, and the mid-cap index, which is down around 0.4% at this point. Bank Nifty, like I said, underperforming. Hi, girls.
Hey girls, good afternoon. Feels like deja vu, right? We're talking about crude prices increasing, rupee depreciating. This is something we were discussing every day just a month back. There was some relief, but then again, the West Asia tensions, they are on the table, and that's what the markets are factoring as well. However, the fall is contained. We are above the 24,000 mark for now. 24,000 is an important support that we are watching out for on the Nifty. On the upside, there is a strong resistance at 24,300. So if Nifty crosses that level, we could see higher highs. But for now, that's not the attempt that Nifty is making for. Currently, Realty Index is the top loser, followed by PSU banking names. Autos also not doing so well. Pharma is keeping markets afloat, so defensives are on the move. But again, it's very stock specific for now, and the WPI data is out as well, Vinny.
Absolutely, stock specific and WPI data is also what we'll be keeping an eye out on. But right now, advance decline ratio clearly is more in the favor of declines versus advances as well. So that is what we're going to be keeping an eye out on. A lot of individual movers also that are coming in on that front as well in terms of earnings. So let's watch out for that as well. But the WPI data, we did see a bit of a flash that is coming in. So we'll wait out for that. The June WPI data has come in at a 9.87%. And that's an important update that is coming in here versus food inflation at 6.14% versus 4.49% on a month-on-month basis. We're seeing an increase in terms of food inflation as well. The poll was of 9.38% for the June overall WPI data as well. Let's go across to my colleague Lata, who's here to break this down for us as well, help us understand what this data actually is indicating now. Lata, over to you.
Well, this is not a good number, obviously. It's almost 10% at 9.87. You're talking about 9.9, really. And the poll was actually more at 9.38, 9.4. The bulk of the numbers were at 9.1, actually, but one reading of 9.75, which was SBI, took the average a little higher. Otherwise, I would have got an even lower average. So SBI really is closest to the guess, which is coming at 9.87. Now, there is no one-to-one correspondence between WPI and CPI, but a double-digit WPI can mean a 5% CPI because some of it does seep in. Manufacturing inflation does make its presence in sooner or later. It gets passed on. When a wholesale price is very high, it gets passed on by the companies sooner or later, and that is bound to have an impact. Now, what do we have here? Primary articles inflation is at 7%. Now, primary articles obviously includes, minerals and metals, and those prices have shot up, aluminum in particular, and therefore you've got a 7% primary articles inflation. Manufactured products is 7.48. That was as it was in May. Fuel and power is at 27.4. See, in the WPI, it doesn't go by the prices raised by the government for you and me. It is the wholesale price. So what companies pay in the international market is already priced in. That's why our WPI has been at 8% from the month of April. 8% in April, 9% in May, 9 point something in May, and now almost 10% at 9.9. So it is already, the government's fuel price hike doesn't impact it. It was already impacted by the fuel price hike. The month-on-month rise in food index of 1.6% is not good. Imagine 1.6 into 12. We are talking about, a very hefty increase if it were to be as bad as that, a 7% inflation. Obviously, it doesn't work that way. This is clearly in anticipation of El Nino. Wholesale prices have gone up for edible oils, for cereals, pulses. So that is also getting reflected. It's not a pleasant number. It is not the policy number. So that's the consolation. The policy number is the CPI, which we should worry about. And that, at the moment, is not bad enough for the Reserve Bank to move. And in any case, the Reserve Bank looks through supply shocks because they can't be controlled by raising interest rates. Only a demand-led inflation, only if it is a price-wage spiral, will the Reserve Bank move. So to that extent, the market is taking this a bit sanguine. But we will have to really wait and see how the West Asia war progresses. Aditi Nair, Chief Economist at ICRA, is with us to give us the comments. Aditi, we are at 9.9 on WPI. Your first thoughts?
Yeah, Lata, definitely, as you said, a very unpleasant number. We had a forecast which was lower than this, and this number is absolutely not pleasant, as you said. Food inflation has come in a little higher than we expected. Typically, in the months of June, July, August, 1 to 1.5% month-on-month increases are quite par for the course, and 1.6% is a little higher than what we had penciled in for the month-on-month food increase. But this is definitely one of the areas that we need to keep a watch on. What happens with the monsoon deficit, the lull which has happened recently after the deluge that we sort of had at the beginning of the month should set us up for a good jump in sowing when the next round of the sowing numbers comes in. But otherwise, perishables, etc., we'll have to keep an eye on the entire food pack in the next few weeks.
Okay, the positive... Sorry, go ahead.
And of course, West Asia, just as we thought that, things are settled, crude is back below 80. Now it's crossed 80 again. So that's the other sort of uncertainty to watch out for.
Yeah, sorry, why I was intervening was to look at the positive, which several economists pointed out yesterday at CPI also. A high WPI also means a high nominal GDP. A high nominal GDP means better tax buoyancy. So are you upping your nominal GDP forecast?
Lata, let's first start with the real GDP forecast. It's kind of going all over the place. 1 week, the numbers seem like we should push up our forecast. The next week, again, something happens that suggests that maybe we need to be a little less optimistic. So we're going to be somewhere in the region of, I'm going to give you a broad range, 6.2 to 6.7% for the real GDP, depending on where the monsoon and West Asia finally end up. And on top of that, we're looking at CPI inflation that's again going to be in the range of, let's say, 4.7 to 5%, maybe a little higher if the monsoon really turns out to be terrible. And then the WPI after that, we've got data on a new base. We kind of do need to watch out for how it behaves. But broadly, I would say the nominal GDP is probably going to end up in the range of 12 to 12.5% this fiscal.
Yeah, I think I even heard a number 13% yesterday when we were discussing CPI. So the government in its budget has factored in only 10.6%. So if you get a 13% nominal GDP, that gives you that much more elbow room to have a higher fiscal deficit. It's not a great deal, maybe a 10,000 crores more or something, but it gives you that elbow room because it is not 4.3% of, say, 357 lakh crore. It is 4.3% of 360 lakh crore or 365 lakh crore. So that gives you a little more elbow room in terms of fiscal deficit. That's perhaps the advantage. Aditi, thank you very much indeed for joining in and giving us an idea. I guess as you get into the numbers, you will have a better idea of where the inflation numbers actually come. Actually, they've also giving us now a producer price index. And the producer price input index has actually risen very sharply to 107 from 104 in May. That means input prices have risen. Whereas output PPI has been more stationary, 109.9 compared to 109.6. So just 30 bips. That means margins have shrunk. your raw materials have gone up, but your output has not gone up. GVA shrinks. So that is GDP negative or GVA negative. But this is just an experimental number. We don't know to what extent it will be used by the MOSPI in the GDP calculation. Suffice it to say now that WPI is a little higher than expected, but it may not impact the Reserve Bank's thinking because it's, CPI that they track.
All right, Lata, well, absolutely. That's on the June WPI data at around 9.87% is where it's coming at. The core inflation above 7% this time round as well. But the other niggling worry which seems to be coming back on board, Lata, is the rupee. It's breached 96. The last time we saw a level above 96 for the rupee was all the way back on the 22nd of May. Tell us more.
Well, the rupee has been down for 2 consecutive days. It was down about 0.3% yesterday and plus a 0.6% today. So we are almost looking at a 1% cut this week. July 10th, when we closed the week, we were at 95.3, now staring at 96.1 plus. It even touched 96.17 intraday low. Now, the fall is obviously entirely due to the war and due to the crude price at 85 and dollar index also striding higher. Now, what we need to see is the market positioning. As you pointed out, up until last week, we were at 94. At its strength, the rupee had even seen 94.5. This led a lot of importers to remove their hedges, and it led a lot of exporters to come and forward sell their dollars. Now, in this last 48 hours, there is complete panic because everyone is short dollar and long rupee. So they're coming and aggressively hedging. Importers are coming and hedging, that is buying dollars, and exporters are coming and unwinding their sales, which they did earlier of their dollar positions. That has led to this sharp 1% rise. The Reserve Bank apparently is in the market, but people are not looking at it as aggressively protecting any level. And the other thing that's a niggling worry, which is just a speculative worry, is yesterday the finance minister met all the PSU banks, and today the governor is meeting all the banks. So the worry is, and we know Sapna reported that they spoke about FCNRB scheme and what is the arrangement. So is the RBI a little worried that FCNR deposit flows are a little slower than they would like? So that adds to the market's positioning, adds to the market's hyper worries. All that is impacting the rupee. It is, in the last 2 days, one of the worst performing currencies. But to be fair, up until July 8th, it was one of the best performing currencies.
Okay, all right. Thank you so much, Lata, for that comprehensive breakup first on the WPI data and then on the rupee. Both worrying figures for now. But we'll slip into a short break. When we come back, we'll connect with Satvik Energy Management as Motilal Oswal has initiated coverage on the stock. That and a lot more on the other side.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
leaders in that.
Welcome back. You're still tuned into Halftime Report. Well, Satwik Green Energy, that is the stock on our radar. It is buzzing in trade after Motilal Oswal has initiated coverage with a target price of 565 rupees a share. To discuss the company's growth roadmap and FY27 outlook and a lot more, we have with us Prashant Mathur, the CEO of the company, joining us now. Mr. Mathur, good afternoon. Thank you so much for joining us. Well, Motilal Oswal is quite bullish on the stock, considering the capex that you are entering. For modules, you plan to go to 8.8 gigawatt by FY29. For cells, around 6 gigawatt. You're looking at ingots and wafers as well. So it's backward integration that you're looking at. Give us a sense of what the capex that you will be spending on all this. What is the funding plan here? And what is the asset turn on the capex that you're looking at? What kind of revenue potential are you looking at?
Good afternoon, and very happy to be back on the show. Yeah, so this Motilal Oswal report has been published today morning. So it aligns with what our growth plans is, and quite a positive report to say. So we have our capex plan in 3 phases. The first phase is ongoing right now, which is 4.4 gigawatt of module and 2.4 gigawatt of cell. The capex for that is close to about 1,750 crores. And part of it was funded by our IPO, and rest is debt. The second phase is 3.6 gigawatt of cell, which will make a 6 gigawatt cell and 4 gigawatt module. So the second phase is around 1,700 crores, which will be the debt is already fixed, and the equity will be from our internal accruals. And then the third phase is 6 gigawatt of ingot and wafer. That is going to be next year. So for that, we are working on the plan, either to raise from internal accruals and debt, or maybe we'll go back to the market at that time.
Mr. Mathur, obviously for the ingot, you may look to go back to the market or internal debt. But I want to understand the recent commissioning, right, of whether you talk about the cells and modules, which you're talking about. You said Q1 FY27, H2 FY27. Is that online? Have we seen the module capacity come in online in Q1?
Yes, so module capacity, we will be starting this month.
Okay.
And the cell is also underway, and we are very positive that by second half of the year, we will start getting yield from the cell capacities as well.
Sir, there was no worry in terms of raw material prices going up. Any concern on that, given the recent issues? I'm asking because of that. Any delays or any supply issues that we faced because of that, and maybe the cell commissioning could be delayed, or there's nothing on that front?
No, our equipments have already left, so they are on the way. Part of it is already there. So no specific worries. Obviously, there have been a massive change in the geopolitical situation since February, and there have been the commodity prices also. So that has led to a lot of instability in terms of the price. And also there has been a change from ALMM 1 to ALMM 2 from 1st of June. So overall, the market has, there have been a lot of changes in terms of, or challenges, I would say, in terms of that. But, our job is to go, to fight those challenges and keep performing in those scenarios.
Sure. Mr. Mathur, just based on what you've told us about your order book and the visibility that you have, what are you projecting in terms of revenue for FY27 then? Because you closed FY26 with obviously 110% growth in terms of sales. Are you looking to replicate that?
So we have, if you see our history, we have continuously grown over 88% CAGR. But this year, we will be growing, but it's difficult to give a number, but it seems that it is not going to be over 100% growth because we are in a situation right now where a lot of geopolitical scenarios are going on. Commodity prices are really up and down. So we will see also ALMM1 and ALMM2 implementation. So there has been a lot of uncertainty in the market, because of which there has been some pause in the demand and also alignment on the prices, because a lot of projects are either
What are you
ALMM1,
projecting?
which is now shifting
What are
to
you
ALMM2.
Sure, Mr. Mathur, while you can't give us specific numbers, you can probably give us a range. So if you do 100%, you go to over 8,000 odd crores. But obviously, you're projecting that you're not going to reach those levels. Give us a range in terms of what you could probably see in terms of revenue as an exit rate for FY27. Is it going to be a range between 6,500 to 7,000 crores or 7,500 to 8, a roundabout figure there?
It's not fair to give a number, but if you see the coverage report, it shows about 6,000 crore revenue projected for this year. This looks much in line with what we
Around
feel would be
50% growth is what you're anticipating in FY27. Last question before we let you go. Total debt that will be in your books once the phase-wise capex is done in your books, what will your leverage look like? And since we are talking about long-term targets and revenues as well, what is the general asset turn on projects like this? And since there's overcapacity in the market, do you think you'll be conservative with or see lower numbers than that, considering that prices might fall?
So currently our debt, long-term debt is 200 crores. After phase 1, it's going to be close to 1,200 crores. Phase 2 will be additional 1,200 crores. And phase 3 will be about 3,000 crores. So that is going to be in phases. So peak debt after phase 1 will be about 1,200 crores. In terms of overcapacity, the market has now realigned towards the cell manufacturing. So the ecosystem built up which is happening now. So it is not relevant how much module capacity is there. Ultimately, 1 year, 1.5 years down the line, when ALMM2 gets fully implemented, it is going to be the cell capacities which are going to determine how much you can sell your modules. And currently the cell capacities is only 30 gigawatt, out of which only 10 gigawatt is the latest technology. So there is a lot of headroom. We feel for next 2-3 years, the cell will not have an overcapacity situation. And while the market is also expanding with the kind of situation, geopolitical situation, there is a lot of focus on electric vehicles, cooking, moving electric, and also data center, AI. There is going to be very high demand for energy, and most of it is going to come from renewable energy. So we feel that the demand is going to continuously grow up, and overcapacity does not seem like for the next 2-3 years. And then ALMM3 will come, wherein ingot and wafer will become the norm based on which the capacities will be measured.
Okay, just one number, sir. Margins, obviously we've seen a decline, but we're making a lot of investments. So will it be at the levels of FY26 around 12 to 13% for FY27? Is that the new normal right now?
Yes, it should be around the same number. That's what we are projecting.
Okay, sir, thank you so much for... Okay, sure.
In the first, second quarter, we may see little dip because of the geopolitical situation.
Okay.
But what we feel is that once our cell manufacturing starts giving revenue, that will add in to the bottom line, and we will have a blended EBITDA of about the same which we were at last year.
Okay, Mr. Mathur, thank you so much for joining us on the show this afternoon, giving us an understanding in terms for the outlook of the company, current trends, pricing trends, and what we're keeping an eye on. So thank you so much for that. That's the management of Sattvic Green Energy for you all. But on that note, we're going to slip into a very short break. After the break, we'll have Sachidanand Dutekar of Trade Pulse who will join us to take us through some trading strategies.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
When the market moves, we don't just report, we decode. From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central for your daily source of market intelligence and wealth creation with a commitment to doing it right.
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
ये दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। चौली सर अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई।
Welcome back to a halftime report on CNBC TV 18. Nifty is at 24,050 around that mark, down 143 points in the trading session as of now, 0.6% of decline. But on that note, let's also bring on board Sachidanand Tekar, Vice President, Research, Derivatives and Technicals at Trade Bulls right now to talk to us about his trading strategies. Hi Sachidanand, good afternoon. Thank you so much for joining us on the show. In terms of the levels that now we are keeping an eye out on, last couple of days has not been anything great. Yesterday we did manage to see some bit of a recovery, but any indication of that coming in on the charts today, and what levels are you keeping an eye out on?
Good afternoon, Vinny. Clearly it's a day of consolidation again. What we have been observing here for the last three trading sessions is that Nifty is not able to surpass that 24,200, 240 kind of a zone. Even today, it has been trending below its 5-day exponential moving average, which is acting as a resistance. 24,120, 130 would be a very significant hurdle for the day. And unless we don't see a closing above the same, the expectation of a directional momentum move looks very bleak. On the lower side, we have support and evidence of support at 24,000, 24,040, where its 20-day exponential moving average is also placed. But even this particular support looks, is not looking very confident. So we may see the Nifty, oscillating within this range of 24,120 on the higher side, and on the lower side, we may see some slippages towards 24,000. Which may extend towards 23,950 as well. But if you look at the overall construct, it looks more of a range-bound action, a broader range oscillation. But at least for the day, there is pressure, and that particular pressure is very evident. We don't see the Nifty, closing above that 24,120 mark, at least for the day.
Okay, all right. What would your stock picks be today in such a market?
Good afternoon, Ekta. Clearly, pharma is something which is very interesting. And if you look at the Nifty Pharma Index, we've already seen a fresh breakout from a continuation bullish flat formation. Now here, Divi's Labs contribution has been very significant. It has been one of the leaders of the pack. And if you look at the overall construction from a momentum perspective, we see an extended move towards 71.85. The pattern target on the weekly scale is placed somewhere close to around 73.50. So we are still recommending building fresh long positions here when it comes to Divi's Lab. The stop loss for the trade can be placed at 69.80 on closing basis, and expect this momentum to continue throughout the day. The other pocket of strength is Amber Enterprises, wherein we have seen a very strong rebound during the day. The cluster at around 7,900 has been very dominant, but we see this particular cluster getting breached. We are expecting a momentum push towards 8160, 8200 kind of a level, and hence we are recommending building fresh long positions here, keeping a stop loss at 77.80. And the last call is again a buy call on PG Electronics. Now, if you look at the overall construction, we've already seen a very steady outperformance in the last 3 trading sessions. It has started trending above its 50-week exponential moving average, which will act as a support now. We are expecting this particular move to extend towards 634 and eventually see an extended move towards 680, and hence we are recommending building fresh long positions in PG Electronics. One can keep a stop loss at around 586 on closing basis.
Okay, thank you so much, Sachitanand, for joining us. So those are some technical trades while the markets are at the day's low. Time for a break now. On the other side, Manisha Gupta joins in with Saul Kawanik of MST Marquee and focuses on rising crude oil prices. The war in West Asia is flaring up again. Stay tuned for that conversation.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें ये सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है। ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
SBI Funds Management Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 545 rupees to 574 rupees per equity share. Bid/offer opens on Tuesday, July 14, 2026. Closes on Thursday, July 16, 2026. For risk factors and other details, please refer to the red herring prospectus dated July 8, 2026. Read with the addendum dated July 10, 2026 to the red herring prospectus and the abridged prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Welcome back, and joining us on the show now is Saul Kovanik. He is Head of Energy Research at MST Marquee. Saul, hi, thank you so much for joining in. And it clearly is a everyday story, and we're looking at markets absolutely responding to that. But how would you look at the 10% of a jump that we've seen in crude oil prices now, almost $85 to a barrel, given the fact that both the countries are now claiming to be controlling or wanting to control the Strait of Hormuz?
Well, we've been on a roller coaster ride for oil and fuel prices. We obviously saw very high prices in March and into April in the wake of the war, but prices were really coming down again in June in expectation that the ceasefire would see a rapid opening of the Strait of Hormuz and in fact even tip the market into oversupply. But that's all been dashed over the last few days, where we've seen now in the wake of Trump calling the MOU and ceasefire over, reimposing a blockade, Iran is firing missiles at Gulf states and continues to fire missiles at ships, including hitting 2 UAE-linked ships over the course of overnight. And that's seen volumes through the Strait halve from the low levels they were at last week, and they're sitting at about 15% of pre-war flows. And so that light at the end of the tunnel for a normalization of oil markets is now no longer there. We're back on an escalatory pathway for the conflict, and volumes to the Strait have been reduced again. And that's seen oil prices edge up into the mid-80s. But that's still a relatively contained price. And the reason for that is we still see signs from both the US and Iran that they want to contain this conflict. Oil infrastructure has largely not been targeted, at least yet. Israel has been on the sidelines of this current conflict, at least so far. And that's seeing the market still willing to assume that there's going to be a de-escalatory off-ramp at some point ahead. But it does mean if it doesn't go that way and these things spiral out of control, there's still a lot more upside to oil prices in the weeks and months ahead.
Saul, if you were to see both of those scenarios play out, what would be your best case and a worst case scenario when it comes to at the Strait of Hormuz and then an impact on prices?
Look, best case scenario, if we saw de-escalatory off-ramp soon, is we could return to where prices were in the last week or so, and we could see that 10% come off. But I don't see a lot more downside beyond that, given the fundamentals here where you've got the Iranian regime wants to control, is absolutely adamant that it's going to control the Strait, and that is fundamentally unacceptable, not just to the US, but many countries around the world. And so this will be an ongoing flashpoint. But in the worst case scenario, where this conflict persists in its current form or even expands to target oil infrastructure in the region, then we could see oil prices head back up above $100 a barrel and retest those levels we saw in March and April. We need to remember the world's economy is still living on the oil credit card. We're still drawing down strategic stocks to get by day to day, and that can only last so long as the Strait of Hormuz remains largely shut off to markets.
Saul, going forward from here, how are you looking at the supply glut situation that the market has been talking about for the last fortnight or so? Clearly, those things change as the Strait of Hormuz is nearly shut yet again. But how are you looking at the global demand and supply, as it were, let's say in the next 6 to 8 months?
So in the world where the Strait was going to open rapidly, what you were likely to see is an influx of oil flows onto the market, particularly in the first few weeks when a lot of ships were exiting the Strait. And that would arrive on the market while we still have demand destruction taking place in parts of Asia, China's still reduced its demand and its imports, and with having strategic petroleum reserve releases. And those two things could actually have flipped the market, at least temporarily, into surplus. And you started to see the market start to price that in last week. But of course, this latest development now throws that out of the window, where now we're back towards flows reducing in volume again. We're now 15% of pre-war levels, half of the levels we were seeing a week ago. And at these current throughput rates, we are not going to be able to see that surplus develop. And in fact, I think we remain structurally short still, relying on stocks to get through this. So we need to see the situation de-escalate and flows to the Strait move back up to 30 to 40, maybe 50% of pre-war levels to start to get the market to go back to a trajectory of lowering oil prices and seeing the worst being behind us for oil markets in the wake of this war.
So the general belief right now is that the things perhaps would take a very, very long time, beyond perhaps a year as well, for things to normalize around Iran and rest of the Middle East countries therein. Would you say that the dependence in some sense of the major producers in that area would continue to go down at Strait of Hormuz? We already have been reading those reports of pipeline development, acceleration going on there. Would you say a lot of things are perhaps going to change there?
I think the whole paradigm for energy security and flows to the Middle East is fundamentally changed going forwards. There is no return to normal. If what we mean by normal, what happened, the situation prior to the war, I think ever going forward, or at least for several years. And that means that because Iran's now in a position where they can threaten the Strait for anything they want going forward, many Gulf states are going to have to find ways to bypass the Strait. We've already seen announcements by the UAE and Saudi Arabia to expand some of their pipeline capacity to bypass the Strait. I expect we'll see more of those kind of plans announced. But the reality is it's going to take a few years to get to the point where all that infrastructure is built and the reliance on the Strait is significantly diminished. It's going to be even more difficult for countries such as Kuwait and Iraq to find their export routes. That will require some multinational cooperation, and some of those discussions have started too. So with this ability of Iran to hold the world hostage over the Strait is still going to be in place for a few years until those additional infrastructure can be built out.
Okay, Saul, thank you so much for joining us with your take on what's happening in the energy market. Manisha, thank you so much for joining us and taking us through that conversation. Let's sip into a short break. When we come back, we'll talk to you more about market action. We'll also focus on some of these chemical stocks that are buzzing in trade. And in July so far, they have seen big moves. Stay tuned for that.
Welcome back. Well, for the bank Nifty, that's the clear pressure point today, down around 720 odd points. We have the Nifty, which is now down around 137 odd points, so just about trying to protect that 24,000 mark. Let's see whether that takes place or not. But one space which has been quite resilient is chemical stocks, which have surged anywhere between 8 to 20% this month so far. Sonal explains the run-up in the stocks and what to expect from the sector in their Q1 numbers. Sonal.
Okay, so these stocks have seen a recovery post the news that, okay, the war might not continue, the peace deal as well. But look at the moves in these names this month. Sumitomo Chemicals up 25%. We do have Sudarshan Chemicals, which is buzzing today, was up 22%. Jubilant Ingrevia, Tattvachintan Pharma, which has otherwise been an underperformer. Balaji Miles and Alkyl Amines, one-way move there. We do have Deepak Nitrite and Lakshmi Organic as well, which are up around 8%. Going back again to the previous plate, because these stocks are still off their 52-week high, some of them by a big margin. Sumitomo Chemicals is down 21% from 52-week high, Sudarshan Chemicals by 32%, Jubilant Ingrevia just 4%, but we do have Tattvachintan Pharma, Alkyl Amines, Deepak Nitrite, Lakshmi Organic. They are sitting much lower than their 52-week high levels, which they did see in their prime. But in terms of quarter one numbers, it is expected to be very weak because these companies have seen huge increases in their raw material costs because most of them are crude based, and crude prices saw a sharp increase. It is expected to be a weak quarter and sharp input cost surge to weigh on near-term margins. However, a few companies now in this quarter and the last week of June started passing on those costs to the customers as well in order to protect some of their margins. And domestic demand is the place where they did see a lot of traction. So that is something that will also protect their revenues overall. Additionally, what is the industry focusing on? What would the fundamental trigger be from here on? It is the ongoing anti-dumping duty investigations or the approvals that have come by for these companies. So I'm just listing some of them. It's a huge and a long list across the board. For Lakshmi Organic, it is acetoacetyl derivatives, which is ongoing. For Balaji Specialty Chemicals, which is the subsidiary of Balaji Amines, it's ethylene diamine, where there is an imposition. For alkyl amine, it is monoisopropylamine, where there is an imposition of anti-dumping duty. For Deepak Nitrite, it's on sodium nitrate. For Sudarshan Chemicals, it's on azopigment. And for Deepak Phenolics, it's their biggest product ever, which is phenol. So all these places, either they have received the approval or it's ongoing, and there is some positive traction on that one as well. So this is one of the things that the street is factoring in as well, that ongoing anti-dumping duty investigations could turn positive. Let's talk about the valuations now. Every company has a different product profile. Not all of them are peers for each other. So just keep that in mind. But the sector continues to trade at premium valuations. We do have Sumitomo Chemicals, which is trading at 35.5 times. Sudarshan at lower. Jubilant Ingrevia, despite having a big commodity portfolio, is trading at 26 times. Tattvachintan Pharma, it has been an underperformer despite that 32 times on that stock FY28 earnings. Balaji Amines is 27 times, and its peer Alkyl Amines, it's trading at 50 times. So that continues to be at a premium valuation. So it hasn't surged as much as Balaji. Deepak Nitrite commoditized portfolio at 33 times, and look at Lakshmi Organic at 35.5 times. So it is not cheap at all despite the fall from the highs. And maybe that is the other thing that the street is factoring in, that if the anti-dumping duty investigations actually come through, that could be the other trigger for these stocks.
Absolutely, another trigger that we'll keep an eye out on, but that's about the chemical stocks, chemical names there which are in focus or which have seen a move coming around. On that note, we're going to slip into a very short break. After the break, we'll come back and talk about Biocon that's surging in trade today. Factors coming in here, what is the reason behind this as well? We'll take you through all of that.
Welcome back. Still tuned in Halftime Report, and this is our What's Trending segment. Pharma really stands out, and the focus now is on Biocon, which is buzzing in trade after Mylan sells its 5.64% stake in the company. Sudarshan is joining us with more, and later Ekta will focus on the Biocon-Mylan timeline, tracing their 17-year partnership. But Sudarshan, let's begin with you.
So it's been a shock of the day. Two triggers that are working for Biocon. First one, Mylan exiting the company by selling its entire stake of more than 5.6%. And entire stake has been sold via block deals. In today's block window, 9.2 crore shares have exchanged hand, and the price at which it happened was rupees 400 per share at 5% premium to the floor price of rupees 378.50 per share. Remember, Mylan was allotted shares in Biocon via preferential allotment after the deal of company for Biocon Biologics was announced in January 2026. Now, another trigger that's working for Biocon, that after today's surge, company now becomes eligible for MSCI rejig. Company currently is part of MSCI Small Cap Index. Now, after this, it will be rejigged to MSCI Standard Index, and the range of the price range for this is rupees 440 to 445 per share, and that's the current trading price. And also, because of this, the inflows that we might see, it can be more than $260 million. So because of these triggers, now you are seeing a big surge in the stock, currently up more than 6%.
Okay, thank you so much for that, Sudarshan. But Ekta, tell us the Biocon-Mylan timeline, tracing their 17-year partnership, key milestones that were shaped as well. So take us through all of that.
Yes, absolutely. 16 years plus in terms of a relationship is what Biocon and Mylan shared. So it started all the way back in 2009, where Mylan and Biocon signed an agreement in June of 2009, and that was an exclusive partnership to develop, manufacture, commercialize generic biologics. Then in 2013, that particular partnership expanded to cover generic insulin analogs as well. So Mylan basically gained the rights to develop and market Biocon's insulin glargine, insulin aspart, basically all of the biosimilars within that insulin space. Now, eventually after that, in 2020, interestingly, Mylan merged with Pfizer's Upjohn business to become Viatris. So remember that Mylan officially in November 2020 merged with Pfizer's off-patent medicines and generics division, Upjohn, and that created Viatris. Now, what does that mean for Biocon? In 2022, Viatris sold that biosimilar portfolio that they had to Biocon Biologics. So Viatris received $3 billion in terms of consideration. $2 billion was in cash, $1 billion was in equity stake, which was equal to 12.9% in Biocon Biologics, which is a subsidiary of Biocon at that point. December 2025, Viatris and Biocon announced a deal in December of 2025 where Viatris will be selling their remaining equity stake in Biocon Biologics to Biocon for $815 million. So Viatris at that point in time with this transaction got 5.64% stake in Biocon. Jan 2026, Biocon completed the acquisition of the remaining shares of Biocon Biologics from Mylan, and now in June 2026, Mylan has exited Biocon by selling 5.64% stake in a large block which was worth around $363 million. So remember, it is, life comes a full circle. What started in 2009 as a licensing collaboration evolved into what was an actual equity stake for Mylan and Viatris in 2022, and that stake has now fully unwound by Biocon in December 2025, and now Mylan has completely exited what was an iconic relationship that they shared with Biocon.
Absolutely, Ekta, thanks so much for that. An interesting relationship over 16 plus years with both the companies. But on that note, we're absolutely out of time on this edition of Halftime Report, leaving the Nifty at around 24,080 levels. Stay tuned, and up next, a business lunch.
Stocks come in for some selling after Brent jumps to nearly $85 a barrel and the rupee slides to below 96 against the US dollar. Realty, auto and NBFCs drag while metals and healthcare eke out some gains.
After its recent $1.8 billion RCB joint acquisition from United Spirits, KM Birla Group has snapped up Shell's Spring Energy via Aditya Birla Renewables, a Grasim venture at an enterprise value of $1.8 billion.